We're a small group today, guys. So, feel free to ask as many questions as you'd like. Seems as though, I guess, not many people could make it. Okay, so I think what we'll do is we shifted into Optima and we started reading volume immediately yesterday, but I think we need to just take one step back. I want to do a little more with the same kind of manual charting, because I think the manual charting, as much as it might be tedious to actually do, it shows a good logic behind all of this stuff that really, it shows you how you can, if you can do it manually, well, with some software, it might push you and supercharge that same ability. But the understanding how to do it manually is going to really help you understand it, the core of what's going on. Now, I've got a similar chart to what we built with Apple the other day, and in this case, this is Cardano. Now, Cardano sits way down in price. Okay, this is a cryptocurrency for anybody who doesn't know. And it's basically down in the 9 cents, 10 cents, 12 cents right now. Okay, and you can see that I've got that same, actually, this in this case, let me pull up my calculator again. I know the calculator is a little funny, but I know it helps some people just to see that calculation happen. Okay, so basically, if I take my 360 and I multiply it by 0.0, how many zeros here? 0.05 equals 18 cents. Okay, 0.005. So that's not even how many cents we are working with here. This ratio is, if we're working with 0.018 plus 0.018 is equal to, yes, so there we go. You can see these numbers coming up on the bottom here. So basically we're working at, is this 1 cent, one point, or what's 0.018. So 1 cent and 8/10 of a cent. 0.018 is 360 degrees. This is what we're dealing with. So I'm just trying to show you how the same exact logic, I know that was a little bit confusing maybe, but hopefully you realize that if you were dealing with this Apple chart from yesterday, we were at 5 cents per degree, right? And we're dealing with those same exact numbers, but with the decimals way different. But you basically can use the same logic on any kind of scale, right? Any price range. As long as you get in there and you set your levels of 360 degrees to be what is required. Now, here we have an hourly chart, and you can see that on average, with my 20 period moving average, my classic average that I like to use, most of the time, the average is sitting at about 0.5 here. Now, we're going to go through that logic, but generally that tells me that on this hourly chart, we're working at this, multiple of 5, okay? And well, because Cardano sits within this price range, we're working with a multiple of 5 in a sense that we're taking our 360 degrees, we're multiplying it by what is a multiple of 5, and then we're sitting it, that 360 degrees within those divisions. So this is just 360 degrees. 160 degrees multiplied by 0.0005. And that gives, oh no, 1 more zero, sorry. 360 times 0.0005. And then we get that 1 cent and 8/10 of a cent. So basically, you're seeing that this is the ratio. This is the price degree ratio right there. It's very tiny, right? I mean, it's just that kind of thing you have to deal with. If you were dealing with the ratio to Bitcoin's price, well, that would be even crazier into the decimals, okay? So what I want to do with this now, I've set up that same moon structure. I've got those dates that the moon crossed 0 degrees. Here's that same date coming up in September 3rd. right? We already had that on our Apple chart, okay? And basically seeing the same consistent volume, we could say, okay, well, we did get a little bit high today in volume, but we're sitting back down on our 0.5 and resting there for now. So we can say that at least for now, this ratio, this structure is working for us. If I were to be really working with this manual chart, I would definitely set up not just a 5 cents or you know, in my multiple of 5, that wasn't 5 cents, but that fraction of 5. I would also do a smaller ratio, maybe down to 0.00002, or I would bring in that bigger ratio. You know, if this is going to be 0.00005, well, then we're doing that ratio of a multiple of 1 and 1 higher, right? So if this is, say, 5 cents, it would go up to 10 cents, or those fractions of a cent now we're dealing with, but from 5 to 10 then, okay? That way you're getting that higher level ratio. And we'll go through setting up this stack of volume so that we can read the ratio. But the idea is that you've basically got to have multiple setups, but generally there is going to be one that is the average that sits, you know, most of the time the stock sits there. Most of the time the volume sits there on this time frame. So what I've got now, instead of taking just one natal planet, this one's going to be difficult for somebody who might be doing it manually. Okay, I'm going to show you an ephemeris with the natal date of Cardano, and we're going to look at the natal positions of the planets. You can see I've got the boxes split up into fifths here, right? As our quintiles, but that's just arbitrary right now. There's no reason, because truly what's going on is I've got ratios here for all the natal planets, okay? Rather than taking just Jupiter and then just the Jupiter harmonics, instead, this time I've taken all of the actual natal planet positions and popped them in as this planetary ratio. Okay, so we'll take a closer look at that right now. Let me get, so for Cardano, the date of the Genesis block, I've got it here. If you go here to the official Cardano webpage, they've got a block explorer. This is just for people who are into crypto, but obviously, if, you know, just understanding that this is the first movement of this particular currency, it's recorded in time and permanently in history. And you can see the date there, 9/23/2017 at 9:44:51 UTC. Okay, so again, people should realize right away there's a nice numerology connection there to this time, and you know, it seems as though people that build crypto and know, they kind of know about these cycles, or these cycles just happen naturally. But one or the other, it's interesting to see those kinds of things pop up. But this date is the one we'll use for projecting any kind of geometry of the planets. So let me pull up, we can just pull up here. Our natal positions. So let's change this here to, oh gosh, here we go. Let's just, there we go. Okay, so this time I'm going to enter 9. September, sorry, 23rd, right? Let's look at that date again. September 23rd, 9:44, okay. Now, I mean, unless you're going to, the only reason we need this exact time is because, well, first of all, we're going to get the proper decimal places for the price of each planet. So if that's something that you're really into trading so closely, you need decimal places, then, you know, so be it. But basically, this is going to give us the true natal position of the moon and the faster planets. Okay, so if you don't enter this time, you just choose the day and put noon, like some people might classically do, you're not going to get the actual time of the moon, and therefore the natal position of the moon. So if you start using the actual natal position of the moon as something of a price, well, it's going to be wrong, okay? The other thing that you need to do In this case, using this chart, I would just set it to London, okay, London, England, because that is GMT 0, UTC time is basically that time, okay? So the actual, if you were working with a natal chart here, I think that for Cardano you might use Zurich, Switzerland. But to get the right time zone, in this case, on this sort of elementary sort of ephemeris, we're just going to be pulling out the degrees of the longitude of the planets. We're not going to look at the natal positions and the house positions, etc. We're not going to go into that full natal chart research. So this is good enough for us. But if you need to know the exact location for your actual astrology, well, you need the actual location of the birth, and that would be in Zurich, Switzerland for ADA. So let's use England because this is for our time. We know it's UTC time, right? That block is set to UTC time. So let's calculate this chart. And you can see that we've got it set here. Oh, did we set 2020? Oh gosh, 2017. There we go. Okay. Local time, GMT time, is that not? Universal time, Is London, England not universal time? Have I been fooling myself? Can I just say GMT? No. Well, okay. Well, we might be an hour off with our position of the moon, but let's not worry about it too much. Okay, because it's UTC time, universal time, showing us at 1 hour less than the time in London, England. It must be something about daylight saving time. All right, I don't know, British summertime. Okay, there we go. That's what's going on. All right, so UTC time, this is probably good enough actually. So you can see how this stuff becomes kind of fickle, but also, you know, basically what we're concerning ourselves with is this exact 1 degree here, this 14 degrees of the moon. Okay. Because this is the actual moon's position. Let's go here. Right, the moon, longitude 224, 14. So this is the only one that changed fast enough that makes it important enough to use the actual time. All right. I don't want to dwell on that too much more. But basically, now that we have these positions, right, we can actually take these positions and convert them to a ratio out of 100% like we did yesterday. So instead of just taking Jupiter on this day at this time, we'll take all of them. And so rather than having to deal with trines and squares and all the aspects, we could do something like look at all of the conjunctions where the moon touches each one of the natal positions. So we're going to look at the moon transiting again, but this time we're going to look at the actual moon touching each of the positions of the natal planets. And here I have, let's see, let's make sure I've got it right. Have our 2 charts here. Okay. So if I double click on one of these boxes, I've got my ratio set already. So let's get through here. So I've got 181. Now, for my color coding, I would definitely come up, if you're going to start doing this kind of work, I would come up with a color coding for your planets. My color coding comes from software like Optima and also Galactic Trader. It just has these colors that commonly get used for planets and they become my own. So you can see the sun at 181 degrees. Well, we already know just from our experience with 181 or Jupiter being 187 degrees for natal apple, we know that that's about 50% of the circle, 181. And this is my color for the sun, this light green, and you can see basically 50%, right? That's our 0.502. That's basically 181 degrees, okay? And so I've taken all of these numbers and I've plotted them into this square. And then if I needed another square, I just took another square, copied it over, and added the different settings. So there are two squares here. One of them has the opposite planets there, you can see. So basically I've got here, this is yellow is Uranus. So let's take a look at Uranus, 27 degrees. Well, we know that 27 degrees, well, let's take a look, see if I got it right. 27 divided by 360. There it is, right? 0.075%, right? Or 7.5%. So these ratios out of 100% give us the natal position within 360 degrees of price. Oops. And now what I've got in these boxes, instead of the position of just Jupiter, I've got all the positions of the natal planets as price. And first of all, right away, you can see, I'm sure, yes, they act as this sort of interesting proportioned box. And they do definitely, you'll find, look at how when it crosses 0 degrees, where does it find the high? On the Uranus line, right? Basically the open and the closing of these hourly candles being right there, or these hourly bars being right there on that 0.075% or 7.5% line, which we know is 27 degrees. So what we'll now have to do is see, well, why would it do that? Why would there be these kinds of moves? Well, if I look here, I could see 0.95 crossing the moon right at that moment. This gray, that's my color for Neptune. And so Neptune must have been pretty high in the spectrum of 360 degrees on that natal date. So let's just take a quick look at that. So you can see Neptune almost, way up there near 360 degrees. So we know about 95% is very valid, right? I was right in my calculation. And that moment there, where the moon crosses 95 degrees, without doing anything more than seeing that crossing, we know that that is the moment that the moon is conjunct to natal Neptune for ADA. So I hope that without building this from scratch, you can sort of get that concept. If that didn't make sense, let me know in the box. But essentially, what you're seeing is very similar to what we built yesterday. Here's your 0 degree lines, right? And then your 360 degrees. And let me draw a box just like I did yesterday, just to reveal that one single space for you. If you can't see the rectangle, which is one lunar cycle. And here's my rectangle, there it is. So there is that point of 0 degrees, right? Where the moon crosses 0 degrees. Whoops. Sorry. Actually, this is set to the point where the moon crosses ADA's natal moon. Okay. So the moon box is positioned to where we have 0.0 or 0.622. That is the position of the natal moon. Okay. So that's the conjunction point for the natal moon. That's when the moon is coming up in the sky and it crosses the point, which was the point on the date of natal of the first Genesis block, and that's the point, at that exact moment, right? That minute, that's where the moon was. So that's why I set that there. But we're going to put some vertical lines in here beyond this that sort of make this. It's not like this is the most significant moment. This is just another conjunction, but it's a logical place to put it. But also you could set your moon lines with a box, if that makes sense to you, you can do it that way too. Okay? But within this box now, within all of these boxes that you see here truly, what I'm going to do now is I'm going to start adding the vertical lines, and those are going to tell me where the conjunction occurs. So if I were to add here in my time levels, not only, well, you can see my price level for the sun is 502. So let's set 502 in time as well. Right? 502. Okay. And let's see here. Whoops. Actually, I might be doing this wrong. Yeah, sorry about that. I did confuse myself by setting up the box that way on the moon line. That was silly of me. Yeah, that would be the point. Okay. 502, yeah, okay. So basically, the reason that the 502 in time didn't work out is because it's more about when the moon crosses that. So we, as you noted, I was saying that the boxes were starting at natal moon, but what I'm going to do is actually start the boxes over at the point when the moon crossed 0 degrees. That was more logical, and that's why I thought I did it that way from the beginning. But maybe I was thinking I was doing something creative here. 108. All right. So 502, basically, as the moon is crossing up here, might not get it too exact because let's get our timelines perfect too. This is 323, so we'll set the 323 and the other one as well, 323. Okay, so the idea would be as the moon is coming up through this structure, at 502 in time, we're crossing basically at the same time 502 in price, okay? 50% of the box at 50%. That's the sun's position, the natal sun position. Now, in this manual software, right, we're dealing with this averaged moon line, right? I showed you how overnight there's those gaps in the way that the moon line sits because you're not getting those moments. This is a 7-day market, but truly the moon line is, well, going into the weekend here, well, maybe it should be almost more perfect than this, but maybe we can get it. Let's just make sure. Huh. There we go. There's the culprit. Okay, 502. 502 there, okay. That makes sense. Sorry, guys. So there's the position of the moon's natal price and the moon coming up. And at that exact time in the moon's cycle, it also crosses the natal position of the moon for the conjunction, okay? Now let's move that same, let's get rid of these boxes. Okay, now that we've got that one conjunction set up, I think you realize what we can do is we can just make all of the different conjunctions. And the idea would be that just like when you're dealing with any natal aspect or transit, we should expect the moon to tell us where the price is going to be. And well, as that crossing occurs, you're looking for the moon to be with the price to actually move to that point. It's going to depend on the ratio. So on this manual chart, it might not work out perfectly every time, but we'll get in a little closer later. Okay. We'll get in a little closer with more multiple ratios in Optima. But just to show you, pulling these different positions up here and setting them within those different levels of 360 degrees. I know this gets, maybe a little bit tedious, a little difficult for people to chart this way. That's why, I suggest trying out something like Optima, but whoa. So I want this other box. What is this here? 0.5. Let's get rid of that. Oh no. Okay. Well, I guess I have 0.5 set in this box too. We don't need that. Okay. So I'm just bringing that conjunction up to the 3 different levels, and you can see that right before the conjunction, the price is here, and it falls 360 degrees to the next conjunction, the actual moon line, the next line where the, where the conjunction happened, basically on that level below. When did that happen? Well, we see basically we have this sort of lower level, should be smaller numbers at the bottom, 50% line right there. We're set to the 50% line. The volume is just below. The market doesn't quite make it there to the 50 cent geometry. This is 0.00005. You know what I'm saying, though, the multiple of 5 geometry. Okay, but it's close enough in that sense that if you expected this point to turn out and you were within this range of 360 degrees, that's your point that you're looking for. And I think that you see that, if these are those points in time as well, that's where the moon is crossing here with this 0.427, this brighter green color here. That's my position of natal Venus. And you can see the crossing there, and you can see the price cross right through. Now you can see also as it comes up, it crosses right through again. And so if you were to set up just these lines as I have them, and you see the crossing of the horizontal line through the moon crossing through those horizontal lines, you know that that is that position. This number here that you see, without drawing it, you know that that vertical line is there. Or you could come in and you can draw some vertical lines, just rather than going in and trying to figure out all those ratios. You could just take a vertical line and throw them down, make sure them, maybe you want to make them the same color as the line that you're matching it to. And it might get a little bit, difficult to lay these lines too, but also that when you lay that line down, it's going to be properly laid to the next level down too. So the horizontal line is a good way to do this, really, rather than entering all those numbers into the boxes, right? But if you do set up one box perfectly and you just continue to copy it forever, this is going to work forever too. Okay. And so you can see basically by this point, we're missing some numbers here. Where'd my Neptune go? There's that one with the 9.5. This has been moved strangely. Let's get this set properly. Just fumbling a little with it, I think. Set it within this range of 108 to 126. Okay. You can see that there, that's that Neptune conjunction again, timing it just right up at the top there, and then it falling down, moves down towards that Neptune, that Uranus, natal Uranus position, and then moving back up there. And you would have technically, a harmonic of the moon at all these different positions. This is just the position of the moon, but we know that there are technically harmonics of this moon. We can put the middle one very easily. We can just place a 50% marker in the box. I'll move over here and I'll set that 50%. Essentially, I just want to find a point where the moon crosses 0 degrees, and then I want to I want to see where the middle point of one of these boxes is, because that's going to help me get the moon line, basically. Well, we already have the 50% of the sun. The sun line is at basically 50% of 360 degrees. So if I just take this moon line, this perfectly set moon line to the speed of the moon, and I pull it down to about basic 50% of that box, you know that that's the 180-degree harmonic of the moon. Okay, it doesn't have to be in a perfect coordinate, but I'll make it a different style just to thin it out maybe. Okay, you can see that that's basically when it's crossing through those natal positions again, it's when the 180-degree harmonic is crossing through. So we had the actual position cross through, and that's where you see the connection to this position. And then it crosses through again up here at the 95-degree mark here of natal Neptune. And then when it's crossing here, you're crossing here down here at your natal Uranus, and we get a connection there to the price technically. And then also as this 180-degree harmonic is passing up through here, we get some movements that are timed nicely to the crossings, but also by the time it finishes off this more important harmonic, let's say, of a transit here of this more important harmonic of the actual conjunction. Well, this is the opposition, and you're getting a connection to those prices too. So, the moon line crossing through these natal positions is really truly what's drawing the price to those different positions. And you can see them in so many different ways. You can see angular relationships to just one natal position like we were doing, or you can take all of the natal positions as we have here, and we can see the planets or the moon in this case transit through those positions and see the price get drawn towards them. Okay. So I hope this wasn't a little, because I didn't do it from scratch, I hope this wasn't confusing. I got a little bit fumbly there, but essentially I just did the same thing as we did with the Apple chart, the Emmanuel Apple chart. And then, rather than taking just the position of Jupiter and then doing those fancy things on the circle, I'm just taking the actual positions of each planet and changing them into a ratio. And that is actually, pretty powerful because, the conjunctions, as we say, maybe the conjunctions, the trines, the quintiles, what's most important? Well, yeah, the conjunctions are important too. They're powerful because they're connected to the actual position of the moon and the actual natal position only. There's no other harmonic associated to it. There's no other position within 360 degrees, which might be also associated to it. So in some sense, it's a very direct call. It's one price. There's no position of, 180 degrees from this exact point that would also be calling the price. Although we did get a movement down 180 degrees, it was more because of the connection to these planets here. Okay. So I'm hoping also you're realizing that, in Optima, these kinds of things are much easier. You just pop them down as an actual degree, and it just puts down the degrees for you automatically. And then you've got your natal positions there forever. But also you could probably put, you could just take in TradingView here, you could take your fib retracement, and rather than having any of these vertical lines at all, any of these things, you could just have your moon lines set to your 0 degree crossings, and then set up a fib retracement going across, extending it all the way across, right within this 360 degrees. And this actually gives you many more, positions for numbers. So you could probably enter all of the natal positions of all of them. Well, you can, obviously, because there's more than 9 positions. And you could punch in all of the different ratios for all of the different natal planets. And you can set it perfectly within 360 degrees. 126, 108. So you can see 0, 25, 50, 75. And those positions within this square, even though they are arbitrarily just like the separated sections, well, they are important too. Technically, when we're looking at volume, we're going to see the volume cross through those numbers. And also, you're going to see how really these numbers are very relatable to the Gann seasonal dates. If you know anything about the Gann seasonal dates, if you took my Sun webinar, you know that they convert to price pretty easily. Just in this exact same way that we're taking planetary positions and converting them into prices, we could take the Gann seasonal dates, which are particular dates in time, and they work out to certain proportions once you lay them as price. And it's very similar to what you see here. And we're going to look at the relationship of the moon crossing through those positions as well. So if you don't like to work this way, or you don't like to work with the natal transits, you find one way or another cumbersome, or you're kind of trying to find the full story and see why it might make every little turn that it makes, getting down on a 4-minute chart, well, then there's a couple more methods to use the moon and the sun to see this, this action. But first, what I want to do from this point, because we were working in this manual charting, and I'm going to basically move to something, into Optima where we're going to be able to, lay this stuff basically automatically. First of all, I want to know, does anybody have any questions about what you see right here? The boxes, again, what you're dealing with is not necessarily time, mostly price here. it's just the natal positions as price. And then in this case, we're just looking at the moon crossing 0 degrees up and through its whole cycle back up to 360 degrees and so on, right? So this vertical line that you see here, this 50% mark, which was technically relatable to also the natal position of the sun, you know, that's great. It's because we started the box at 0 degrees of the moon. But, you know, technically, if you can lay the moon lines down, you don't need to worry about these verticals. You're just worrying about these crossings. Okay. And you can see, I mean, basically right here, if we were talking about it a little bit before, in this zone here, you're seeing some higher volume, right? And you can see that in this area here, there's lower volume. And day to day, there's some bigger moves in there still. There's some spikes, don't get me wrong. From the high here, we start falling at a rate that doesn't really stop or slow down. But you can see the big moves come with the big volume, right, when they break. And we can see basically, you know, an alert to that would be the moment you see the moving average be breaking a new level within this structure here. Okay. And so technically, we'll see maybe that $2 per, or you know, the multiple of 2 per degree here, 0.00002 rather than 5, was sort of trapping the price in a certain area here, a certain zone, a level of 360 degrees. And as soon as this breakout occurred in volume, well, all of a sudden the volume expands this structure that we're seeing to this 0.5 structure, and possibly even up to that multiple of then, rather than 5, but 10. Hard to talk about in multiples of 2, 5, and 10 when you're dealing with such a small number here. Okay, but that's what you're dealing with, 0.0005, 0.0001. Basically moving between multiples of 1, 2, and 5, and then moving up to 10, 20, and 50. Okay, so we'll go through that a little bit more now. So let me just save this. I'll clean this up a little bit for you before I send it to you. So we're going to move away from all the manual stuff now, because it does help us get a good idea of things, but you know, it's really slow and cumbersome, and it's easy to make mistakes. It's easy to fumble around with your boxes, and it's really hard to make multiple levels of geometry. So let's just take a look here. What I'm going to do first, though, is go into my sort of study of multiple time frames, studying the volume and how we would sort of set up a system of geometry to help us determine degrees of, you know, how we have degrees set up to price, that ratio of price to degree. So basically, let's take a look. Maybe I'll take just a fresh window here, and I'll pull up, because we're going to look at Beyond Meat, BYND. I'll just pull that up, and then we're going to look at the, we're going to look at the volume, which I already have open here, there. Okay. Now, this is a daily chart. I'm going to start laying down Fibonacci retracements on here. Okay. Basically, just an entire, just like we were doing across those levels of 360 degrees. Well, I'm going to take this, basically taking a square, right, of volume, and we're putting it over the volume here. So levels of volume set in a square, which is this, because it's a daily, it's going to be set from 0 to some multiple of 10, which is relative to the level that this volume sits within. So if this is at 33 million right now, let me go down to 10 million. So that's my one single level on a daily chart of a box, which is technically set to the 1 by 1 of a day. Okay. Now, this sort of goes into the standard ideas of the $1 per day, $1 per week, $1 per month. Okay. And we set up numbers here, which are going to represent the way that we need to divide volume to see its relationship with price. I know it's a little bit weird, but we're going to go through it quite a bit. So I've got a barking dog here. That's enough. That's enough. That's enough. Come on. Sorry, guys. Right in the most complicated part. I don't want any interruption here. Okay. So what I'm going to do, I'm going to add my moving average, a 20-period moving average. All I'm doing is smoothing it out. As you can see, that it's commonly going to sit nicely within that, on a daily, within that box of 10. Okay. Now, of course, there's other levels of 10 here, and we can place them. In a sense, we could be prepared for any stock with a template by adding multiple levels of this 10 on a daily. So technically, yes, there's this level of 10 million here, but if I just take this, copy it, and if I choose this option here in Optima, paste tool unchanged, it has placed this tool exactly where the other one is. So they're stacked on top of each other. And I can take the coordinates and add another 0. If I add another 0, it's putting it up to 100 million. And what does that do? Well, it gives me that new box of 10 above, right? It's just multiplied by 10 now, 100 million. And there's my lower level of 10, which is more relative to where the volume sits. And you can see that the volume has never really ventured too far on average outside of this level of about 10. I can get rid of the 10% level of the bigger level, and that will clarify the levels here for you. So you can see the 15% of the bigger level is here above what would be 100% of this smaller level of 10. So it's fractal. We have a nested level of 10 within another nest level of what would be technically 100, right? So what we have here is some sort of one-by-one system, just like Gann would do with price, okay? And it's a lot like taking, if I were to take here, this is a Gann box, okay? Or a Gann square, and I just place it at $0, okay? And I set it, I'm gonna set it to May 1st, which is the natal date of Beyond Meat. 2019, at 9:30 a.m. first trade. It's the IPO date. Take my Gann square here, $0, and let's set it to be $1 per degree, or $1 per, in this case, it's doing weeks. Let's do days. Days. So we know it's calendar days is different than trading bars because this is Beyond Meat, so it's a stock. So we can put it to 120. So let's set it to 360. 360 days at $1 per day. Okay. And that's a kind of thing that we're doing with what you're seeing here. And you can see that basically the price sits at about 50% of this box at its highest points, and about 20% of this box at its lowest points. And so what if I were to take this box and I set it to, rather than a box size of 360, what if I set it to 100? Okay, let's just see it. You can see another stack of it. Oops. Right? And what you're seeing here now is a box of 10, in a sense, right? Being put onto this structure, right? It's $1 per bar, and it's set to $100. Box size, $100, right? Yeah, so it's as tall as $100 there. You see that? Okay. And so the idea is that what we're doing with the volume is very similar to what I've done to price here. I technically could take my Fibonacci retracements and place one here. So, I mean, I think if you get what I'm doing here, it's very similar to what we were doing with, you know, the manual setup of degrees. But in this case, it's set to a hard number rather than $5 per degree, and we're dealing with 360 degrees, right? We're just dealing with this number of 1. All right, oops, here's my 1,000, it's 100, right? Technically, you could use a chart like this, and what you're looking for is a break of this 1 by 1 here, and we'll look at when does it move above the box. The break of the 1 by 1 on average. And when the volume really does break above that box is the signal. So if you were here this day, this is pretty powerful stuff, because if you realize that basically what we're looking for is the break of geometry to be related to the break of geometry in volume. Okay? But when we deal with this kind of thing in standard geometry, you end up with anomalies and stuff that doesn't quite work every time, because geometry is so much related to the time frame that you're trading. There is monthly, weekly time frames above this. And when you deal with the planets, things are more standardized. Okay, so there's set, when you're dealing with planets on a smaller time frame, you're actually going to deal with those planets on a smaller ratio. All right. So $1 per degree, $1 per day. I mean, it's not about that really. It's about fluctuating it to the time frame you're on and the volume that you're sitting at. And rather than having this set structure that's always here and then wondering why it doesn't work out, we're actually going to take this structure and constantly fluctuate it to the level of volume, so that we are making sure that the price is constantly sitting within this structure on a line at a time when it should be at the intersections. But the astrology is going to give us all the in-between. Okay, but it's very similar, right? I mean, it's a similar process. And so if I were to take this same chart and move to different time frames, well, immediately, I think you're going to realize, just going down to even a 12 hour. Let's go down to 12 hours. Well, look at I guess I only get until April there with my 12-hour data, but that's okay. Look at where the volume sits within my structure of 10. It's kind of sitting only at 50% all the time. And truly, the fact that we've cut our time in half here, well, the box is actually like 50% now, just like our time frame is 50% of what we were working with. And that's the logic I'm going to start using here, and as I break down volume on different time frames for you. So I think what I'll do is I'll just, for now, actually, just to show you an example of what I mean, right here with this exact example that we're working with, what if I then take, instead of using 100 here and 100 here, what if, because we went down 50%, we'll use 5 instead of 10 here for the millions, and we'll take this higher level, and we'll, instead of 100, have 50, right? And now you can see, although there's more detail here, the relative position on average, let's say, of the volume sits similar to where it did on that daily. Let's pull up a separate chart for the daily. Chrome chart. And let's see our daily on this side again, right? And set these back to 10. Sorry, I shouldn't have deleted that in the first place. And 100. Okay. And now on the left side, I'm also going to reduce the size of the boxes on the price, changing it to 50. It's going to need more boxes. Should auto calculate. There we go. You can see that getting in closer, we get a more detailed look at the price, exactly double or half of what it was. We were looking at double on the daily here, right? And we can get these, we can see the crosshairs are on the same spot there. This is the high that's on the right, and the high on the left being matched there, okay? So there's the two spots that you're looking at together. You can see that they're both working out, but this one gives you a little more information, and it's the same thing that's going on here. We're at about 50% on the daily, we're at about 50% on the 12-hour, right? Because we've reduced it down, but we're getting more detail on the 12-hour. For this little section of price in here, on the daily, our percentage or our average kind of sits a little bit higher than in this position from the high here. It does come down, but it comes down a little quicker, basically at double the speed, which means the ratio for our 12-hour is slightly lower, a little sooner in this case. So if we break down under 50%, we might be going down from $1 per degree down to 50 cents per degree. Okay, well, on the daily, we would be doing that a little later. Here we have the break of 50% on July 13th on the 12-hour. And then here we have on the daily, on July 27th, the break of the 50% on average. So truly, it's sort of a lagging connection. And if we were looking for a call that's being called out on something related to the 12-hour, like the geometry that you see on these boxes here, well, we're going to relate it to the geometry you have set here on the volume on the 12-hour. But as the daily close comes in, I have to be worried that the average is still sitting higher on average on the daily. And as the daily bar closes, the geometry relatable to whatever event is going on will be triggered by this level. And yes, right now, they're basically sitting almost relatively the same. So knowing that that's going on, we're not going to really have to see too much change. Basically, this 50 cents or in this, yeah, this was 50 cents. Or a 50 to 1 box, $50, right? $50 box by 50 days. That's what that is. It's a 1-to-1, right? Okay. So, or not days, but trading bars. Or sorry, in this case, 12-hour bars, okay? And in this case, it's days. And it's set to 100. Okay. So hopefully that was clear. But basically the idea is this, that as you break down in time frame, you also break down all of your relative geometry, these 1-by-1 squares that exist, that Gann talks about. Well, they exist on volume as well, and they help us determine, well, what's the ratio, what's the normal ratio that this sits within? Is it going to be a 2-to-1? Well, maybe in this highest moment when we see the boxes break through, what happens if I took this and I set it to a 2-to-1? Where our boxes are now $2 for every day that passes. So you know that it goes up to $100. Well, look at how much better this section here, which is breaking over the 1-by-1 up to 1.5 and even in volume up to the 20% level. Jumping up to a 2-by-1 here in box levels here. And even if I was, if I was following this, I would bring that up to $100. Right? This faster time when the market's moving faster, this geometry is supported. So if you use Gann squares already, well, this is what you need to do. Just like when you're dealing with Gann squares, when you're dealing with planets and all of those squares that we built with the planetary ratios for the moon. Well, this is the same exact thing you need to be doing for your Gann squares, your standard geometry Gann squares. You need to be changing the volume, changing your box geometry to the volume. Okay. And again, look at that moment that the volume crosses here, right? This 50%, this 100% level, which is on the 12-hour, this 50 level, this multiple of 5. As the volume crosses this level here, we get this fluctuation, right? A breakthrough, a final breakthrough of the actual support level or resistance level, right? Which is actually the moment really when the market finally expanded to the point where this larger geometry was necessary, right? So technically this box was maybe $1 per, right? And it was working well technically, but in these spikes, in these very steep spikes, when the price, when the volume broke over this 100% level, you're seeing a change, which could technically be related to the next level up, which would just be 2. And look at that, right? A more perfect connection to that trend angle, and a more proper top coming in there on there, right? And then, then a flattening out again of the market. Well, maybe we need to go back down. Once the market's up here, though, it's stuck up there. It's not going to fall back through this line unless you get high volume again, right? Which will expand this back up. So truly, now the market's up here, and it's moving back again with this 50% level. And truly, even now, down here, could be at a 20% level, which technically, you realize that if this is a 1 on a 50, right, you need to be dealing with these things. It's a little bit funny, but you could basically just enter 20 here, and that'll give you the right kind of ratio. Okay, you can see that it's stuck within this range just perfectly, right? Once it fell and once the volume started to diminish towards the 20% level, it gets stuck within the geometry of the box that is relatable to a $20 box rather than the $50 box, which was relatable to that 50%, right? And once we start breaking upwards, start going up over 100%, we could either see it as 100, right? Or we see it times 2, which was the same thing. We can see that better connection. So let's see more time frames. If 12 hours, 50% of one day, well, what we do with the different 1 by 1s, we've got our 1 day, we've got 1 week, we've got 1 month, we've also got 1 hour, okay? We've also got 1 minute. And what we do is we relate all of those to geometries of 1. Or I suppose you could look at it as a multiple of 10 usually, right? Some sort of 10 million. Whatever this 1 by 1 sits, it's not going to be sitting at a 30 or a 40, or when it, like at the 12 hour, it's sitting on the 50, right? A multiple of 5. That's because 12 hours is 50% of 1 day, which is set to a 10. Okay, so it's half the geometry. But let's go up to 1 week. Let's just hide these squares. We don't need them. Let's just clone this chart. And let's look at our 1 week now. So we know that we've got our daily here, and we've got a weekly here. 1 week. Oops. 1 week. There we go. Well, 1 week, obviously now, per week, the volume is much more than the 1 by 1 that we had relatable to the daily. And the 1 by 1 number, the multiple that we use for a weekly would be 52. Why? Because there's 52 weeks in a year, and that would be the true 1 by 1 of a week. $1 per week gives us $52 a year. And truly, we don't really enter, if this is 10, right? Well, 1 day to 1 week is a multiple of 7. There's sort of, we almost ignore the fact that now 1 week, 1 day is within 1 week, okay? And we use these 1 by 1s that will truly be relatable to a square, in this case, of 52, okay? Because of this, because it's a weekly 52. We just take this 10, and we change it to a 52. And now we'll get that other level here, change that 100, change it to 520. Okay, that fractal level outwards. And you can see recently 50%, that 50%, but you can see on the daily, we've already fallen below 50%, and on the weekly, we haven't fallen below 50%. But they are stuck within a 1 by 1, which is equivalent. And truly, they do stay similar levels of volume. There's just more detail on the daily. And I hope that you can see that, the highest highs that come in on the weekly volume sort of mirror the highest highs within this structure. But obviously we get more average movement from a daily average than we do on a weekly average. The weekly hasn't really built up ever over the 1 by 1 here. So that means the 1 by 1 structure is going to be working and holding for most of the time for Beyond Meat here on a weekly, but could technically fail. We're popping over here on the 1 by 1 on the daily, but we could be, dropping down to 50% and 20%, much lower at times in these really low volatility moments. And so I think that, if you're dealing with this stuff, I hope you realize these are weekly and daily charts, and these move very slowly. You see the average moving. If you realize you can calculate a moving average, you could also just use a trend line on a moving average to help you. So technically, it's not like we're frantically searching for volume levels to be hit and have a million alarms set or anything like that. When you see a crossing of an average, that's an important moment. Look for the average, look for a change in trend of the actual volume to kind of move up to the points when the averages cross through these points, these hard lines of the box, the 50% levels of the box, the 61.8 of the box. You could use your own numerology if you like different percentages. Go ahead. I'll use also the GAN percentages in there. Why not, right? Instead of these ones, they're close enough. But noticing that when you do cross these levels, first of all, you'll see when you get the average crossing here at the 100% level, you see that change. And then when it comes back down and crosses here, we get a high. And then it falls down and hits the 75%, we get a high. And then it falls again, you hit the 61.8%. Well, on a daily scale here, if I zoom in where we hit the 61.8, well, we get that sort of harsh low and a spike upwards, okay? Where it hits the 50%, that's basically the more major low here, where it comes in and bounces. It's the 38.2, that's when you get that. So, the average volume line crossing through the box is actually a very powerful indicator. Let's look at the weekly one here. As this average volume here crosses 61.8, that's your first bit of 20 period weekly moving average that you've got here for Beyond Meat. And look at that, marks the high. It's the 50% there, that's the long bar. It's the 50% level. Crosses back over the 50% level there, that's your long bar. Crosses over here at the 61.8, that's sort of the midpoint of the high. And you can see even up here, crossing the 75%, crossing it again here. It's almost like this average is being mirrored by the price, okay? And look at that, when you get this crossing here, topping out, the average doesn't follow through, and you get a collapsing, and we don't move any higher. Okay, if we wanted to move to new levels, well, we would definitely have to see the average sort of be broken out and move upwards, right? And we'll show you how you can deal with cycles and how we might be able to predict volume a little bit. But let's move further into the dividing of all of these. Okay, again, we've got also stacks below here of 10%. So if I was dealing with levels which got really low, and if you're dealing with crypto, you might find that the markets move at 100 times the rate volume at times than what they might sit on average, and that's just ridiculous. But technically there would be another lower level of 10% here that we could technically just take this arbitrary for this one, we don't need it, but copy paste the tool unchanged, delete a 0, and that's that lower level for you, right? It's always there anyways, technically, right? We're taking hard numbers off a scale and relating it to the time frame that we're on. Okay, so let's take a monthly. And why am I showing you these on a moon webinar? Well, we're going to get down to the lower time frames. But if you were dealing with those big planets, kind of like we did in our first webinar, and since I'm explaining volume now, I might as well talk about it a little bit, right? If you had those big aspects happening between Pluto and Neptune that take months and months to pass, well, you might look at the monthly volume instead and get the ratio from there, because you might find that those planets moving at the speed that they do, in the sense that their cycles are very long, well, so is a monthly chart in a sense. The cycles that happen in the volume happen much slower, and therefore maybe those moves will be more relatable to the volume levels that you see on your monthly or your weekly. So let's move up to our monthly real quick. Just get that one out of the way too. I'm going to remove. Oh, well, okay. I guess it's fine. Sometimes you don't want to in Optima load too far into the future. Okay. I can remove some of these monthly bars into the future here. I don't need 1,000 blank bars. I just put 100. If you're dealing with Optima, you might overload your system. Okay. So now that we're on the monthly, well, the monthly 1 by 1 is 144. So we could just take all the stacks here, and rather than being at 52, we just move them up to 144. And set it to 1 month. You can see we only have a few months of Beyond Meat. It's getting a little tight in here. Instead of 52, it's 144. Okay, so it comes out to 1440. Instead of 52. Oh, actually, sorry. Instead of 52, we should be doing sort of like a relationship of 55.2 to 14.4 over what would be the 1 of the 1 by 1 on the daily. Okay, so 144. Oh, where am I here? 144. Oh, okay. Maybe I already had taken off. Oh, 52. Okay. 144. 144. 0. Okay. There we go. That's the level. And we don't even have 20 period monthly yet. Let's just go to something else for the monthly just for now. I know that it's a little bit weird to do, but we'll do another recent IPO. Sits within a relatively similar volume level, Roku. Okay, you can see there, 144. That's my 1 by 1. I'm actually sitting on Roku up here near the 20%. Okay. If we look back, let's just go back to Beyond Meat real quick. If I dropped that moving average to something less, right? Is it still there? Yeah, the moving average is probably still there, just not visible because there's not enough data. So we could drop it down to say like a 4-month moving average. Well, look at that, you know, we're stuck there around the 1 by 1, and it's moving down to about 50% maybe, right? Not enough data here, okay, but that's our levels. So it's just going up from 52 to 144, all right? And yeah, there's definitely just another level of 144 below. 10% within 100%, and then that 100% becomes the 10% of the next level up, okay? But the 1 by 1 numbers need to be set to the time frame that you're working with. So let's look here now. We've got here a monthly, a weekly, a daily, and a 12-hour, okay? And these are, you know, good for planets, I'd say, all right? Now we get into the moon, all right? Once we can figure out how to lay out these kinds of structures on any stock, then we can basically just lay them down and immediately know what's the ratio do we use. What's the ratio going on right now, especially on an hourly chart when you're dealing with the moon, you've got to know right away, what's that ratio? I don't want to have to look back, you know, on years and years of data to determine ratio, right? So basically, let's get down here. Let's open up another, I'm going to copy this one here, clone it, and then I'll move it to a new window so it's a little bit less convoluted. And let's get rid of the squares. We don't need to look at those anymore. If you got the idea of what I'm doing, I'm just sort of showing you how you would relate the geometry on the price to the volume, okay? And that's why I was fluctuating those boxes with the fluctuation of the volume. We're gonna be fluctuating planetary geometry with the volume. It's the same thing. So let's go down to, in this case, a 1 hour. That's my next 1 by 1 down. If I've got 1 day, 1 week, 1 month, well, my next level down is 1 hour from 1 day, okay? And that's what I'm relating my level of, my next level down of 10, okay? So 60 minute, 1 hour. Okay, and let's bring this down here. from 50, which would be from the 12-hour, we're bringing it down to the 10 level, the next level down of 10, of a 1 by 1 relatable to 1 hour. Now, because this is beyond meat, and you're noticing here these tiny little in-between moments, we're getting a weird moving average and gaps in between. Why? Because that's the aftermarket time. And if you are trading with the moon, I would always leave those aftermarket hours. But if this bothers you, you can get rid of aftermarket hours. TradingView automatically gives you the ability to remove them. This is my IQ feed. So basically you can go into here in my data, exchanges, go down to IQ feed. And you can see here, basically I can override session times. I could ignore out of tick data or aftermarket data. Okay, could set the times. So you can make it opening at 9:30 with the market, right? Rather than being just any time of any data available, I can specify it. But I would look at the moon with that extended time shown. But you must realize that when this is going on in the morning or at night, volume just cannot be compared to what happens during the day. And it does kind of mess up your moving averages, right? With this little fluctuation would not be here if there was not these very low volume bars that happen overnight. Okay, so we're getting into a little bit of fundamentals here, as far as I go with it, really. Now, from this point, you realize we just moved down in ratio level down to this 10 level, and technically, yeah, there is another level of that 10 below there. Okay. So if at any point, let's just look back, I don't think it ever happened, but if it ever did happen, but you can see the 10% was tapped upon here. Never really got tapped upon here again in this very low volatility. Never really tapped on again. So we could use it, okay, just the way it is. But, adding a separate moving average copy tool that's a little slower, that doesn't account for all of the in-betweens, maybe a 50 period moving average, just to sort of extra smooth it out. I know that it becomes a real sort of custom or personal thing, moving averages. But my yellow one here is a little more smooth, and it's not accounting for all of those jagged spikes down overnight and up during the day. Okay, hopefully this is making sense. We're getting a good view though here of what would be, mostly what I'm paying attention to here is the 10% level, the 20% level, and the 50% level, and technically the 100% level. Once we break through the 100% level, we should see the biggest moves. And of course, that's what you see, right? Any spikes, usually they're going to happen in association to something that's breaking the 1 by 1. And then you can see that in between all that time, we're dealing with something that's working at half the volume or less than those big spikes. Okay. And so now going down from our 60-minute, now this is great for the moon technically, right? And actually, let's just do a little bit of a preliminary test. It's similar to what I was showing you last night a little bit already, but now you know what I've done, the logic behind it. Breaking down from a day, the next level is the 1 hour, which is a 1 by 1. And now I can add my my moon line, again, planetary lines, set it to say it's, within a $360 range. Maybe I need to see either $1 per degree or 10 cents per degree. And we can see what looks most right. 10 cents per degree with the moon. Okay, that would be a good 1 by 1. You see a good connection to the biggest moves. Okay, you can see the channels working, but you can see that the peaks and troughs, the biggest moves kind of move right through this geometry. And it's a good level for us though on average, all right? And then that would be what I would consider the 1 by 1, as in when you see these breaks of the 1 by 1 in volume here, we're looking to this geometry of the moon. And you can see the moon is resistance here, set to a 1 by 1 of 10 cents per degree, right? Set it to -4 because right now we're in the summer. And so, basically what you're looking for is this 1 by 1 to be relatable to the 1 by 1 geometry of the planets as well. And so if I'm looking at the moon's position here, going across the sky, going up through my levels of 360 degrees, which would be set to also that 10 cents per degree. Let's look at those, 10 cents per degree, 0.1. Well, look at that, right? 360 degrees to 360 degrees, that's the moon cycle. You can see that date there, August, and then the one that's coming up here, September 3rd, right? That's that same one we came up with. So we can see that this is sort of the main 1 by 1 geometry. It does fit nicely within here. 10 cents per degree makes sense because it's within $360 of price. And so we might need to see some more condensed versions of that. So 360 degrees. So now we're seeing, a decimal over. Basically every $36, we're seeing a new level of 360 degrees. And you might then, if that's the maximum for our hourly chart for Beyond Meat, we're going to watch for the breakdown of volume, and we're going to match the geometry to the breakdown in volume that you see here. If we're at 1 here at the highest moments, and then we see the breakdown beyond, especially on average, to the 50%, I'm going to have a layer here that I'm going to name $1 per degree, or sorry, 10 cents per degree. My true 1 by 1 of this hourly chart, 0.1, right? Okay. And then I can just duplicate this, clone this layer. Now I've got 2 copies, and I'll just take it and make it a 0.05 layer, 5 cents per degree. Close that one off and change my settings. So now I'll have my 1 by 1, my 10 cents per degree there when I need it, but I've got my geometry set up for my, I've got my 0.05 geometry for the smaller movements when the volume is less, right? And I'm sure that you can see now we're getting a little more connection to some of these smaller movements here. And also, there would be as well, probably you'd be dealing with, just like before we were dealing with harmonics, like our 180 degree harmonic, or our square harmonics even. So let's add our squares. And you can see the thick moon line, that's the actual moon. And then the 4 harmonics, or 3 harmonics, the 4th being the 0 degree line. So that channel is working very nicely, especially at these moments when the volume is still quite, high compared to the average, maybe over here working even better, right? These higher, faster movements. Well, look how perfectly these moon channels are working out. And well, basically, what's going on here? Well, we're at a lower ratio immediately below the 50% because we're crossing down to the 20%. And that would basically mean that we're moving down to 2 cents per degree as well. I would just take this, clone it, set up a 2 cent per degree. And I'm hoping that you're realizing that if you were doing this in, oops, did I not change this? Let's see. Planetary lines. Let's have another look at that 0 point. Let's look at that 5 cent again. Okay, that was the actual channels. Okay, but you can see that it is even better actually. So let's look at our 1 or our 10 cents per degree, right? Look at the settings on our moon, 10 cents per degree, right? That's our moon line. And then let's look at our 5 cent per degree. A little tighter. Those channels are more defined, especially in these thinner movements where the volume is less. And then in the tiniest of times here, when the volume is the tiniest, but you know, really it's still breaking up above 20%, but we could see these smaller channels. And well, you know, we might want to then look at the lower time frames if we're getting down into these moments where the volume is so low that even on the hourly, it's a little bit unclear, these channels, and it's hard to trade, and it's hard to figure out where your aspects are and where all the different levels are. So from here, let's get down from a 60-minute. Well, you could do 30-minute, right? What would that be? A 30-minute is 50% of 60 minutes. So that would just bring down our levels to 50%, right? Whatever this 10 is, well, that would be a 5 for our 30-minute chart. So we could say, clone this, and we would just move to a 30-minute chart. And we would set out all of our geometry here to 50% of what it was. And you can see now you're getting that same readout, but it's a little faster. You're seeing the averages, they're crossing down a little slower, or sorry, a little faster through those times. When, first of all, when the market's not going on, right? On those after hour market hours, but also you're seeing, you know, that 50% level kind of coming out only in the highest moments, and a 10% and even a, sorry, 20% and even a 10% level. So knowing that, well, you know, at the lowest moments of being 2 cents per degree, well, you could definitely see the connection here to this 20-cent level, right? Or sorry, 20% level and 2 cents per degree, right? So in those smallest moments, the market's moving at 20% in volume here on a 30-minute, but we could also break down further. Let's go down, clone it. Let's go down to a 15-minute chart. Well, 15 minutes great, because if we look at, you know, you notice I skipped 4 hours. Well, what would 4 hours be? 4 hours would just be 4 times our 60-minute. Okay. So whatever 10 is, it would just be times 4. But 15 minutes is a breakdown dividing by 4. So let's go to our 15-minute chart. And let's just break our volume down further. 15 minutes. So instead of being 50, it goes to 25, because that's a quarter of what would be our 1 by 1 on our hour. And again, you're getting the same relative levels, but you're getting a faster average, and therefore you're seeing the response on a closer, more microscopic level, and seeing these levels sort of change and fluctuate, and the targets happening closer and closer. And if you had actual astrological targets within these little lines here, where you're expecting the moon or the price to be on the moon, you would then be able to see where, you know, why the moon, why the price didn't get to the moon. Well, you might find that, well, we didn't make it all the way to that 0.02 geometry in volume, right? The 2 cent per degree geometry in volume is represented by this 20% level. You can see that actually for a couple of days, the average here is just finding resistance at that 20% until this breakout. And so where's it finding resistance? At the moon line related to $2 per degree, or sorry, 2 cents per degree. The two being, you know, matched together there. And well, of course you could get down even further, right? So let's go. I like to use a 4-minute chart for the moon. Oops. Yeah, you can see a moving average on there too. The same moving average will help you kind of see the price relative to that. Okay, but that wasn't what I was trying to do there. I'm trying to clone it. Let's clone our chart again, and we'll go to a 4-minute chart. And while this is a 4-minute chart, and 4 minutes, as you noted, we're just taking percentages out of 60, right? So a 4-minute chart divided by 60, 0.66 or 6.6%. Okay, so that's what you're relating a 4-minute chart to here, a level of 6.6, rather than 25 being the 15-minute chart. I would change this to 6, right? 250 into 66. All right, and again, you can see the levels, again, 50% being that good average, that highest level, meaning again, only 5 cents per degree. Okay. But breaking up high there, right? The trigger coming in when it breaks that 50% level. Well, that means that we would jump in ratio. We would see a break of that 50% level in volume. So let's get a little more specific now that we've got this, what we've got the 1-by-1 code essentially, right? Oh, yeah, sorry, Nick. Yeah, that was the way to do it. The filter out the ignore out of session ticks. That's definitely the way to do it. Yeah, sorry, I kind of got lost in my setup here. Yeah, but I would say for the moon, keep your out of session ticks, okay? Because you want to know what's going on in the morning here, okay? I know that you can't really relate the volume. It gets a little bit difficult, but usually in the morning, it's just working so that, well, what if if you're trying to find out, is the moon going to be, or is the price going to be on the moon at the open? Or is it going to be above the moon at the open? Well, it's going to happen overnight or in the morning. Usually it's going to shift to the position it's going to begin at 9:30, and then the effect of whatever is going on that day will occur. Okay, so that floating that occurs overnight is very good to know for your entry in the morning. And we're dealing with intraday data. We're dealing with a 4-minute chart here. This is for fast trading. There's no question. We're dealing with intraday, right? So now that we've got a good setup here, basically every time frame, right, relatable to the geometry, the planetary geometry, we could just basically, if I want to get right in with Beyond Meat, well, Beyond Meat, I can look at their lunar transits, okay? And let's see if I'm on a 4-minute chart here. I'll go over here. I've got some lunar transits set up here already. Transit, there we go. That's the one. So I'll just copy that over. Copy tool. As a matter of fact, what I've got here is a 4-minute chart. And well, as you can see, this is actually Beyond Meat 4-minute chart. We've got a setting here of 2 cents per degree. And we've got our structures here, that's 6.6, 66, right? So it's the same chart. So we could just stay here, all right? So we're going to move into something a little more complicated now, right? So we've got our natal transits for moon transiting natal Jupiter again. Let's just see those since we're familiar with them. We're set to 9:30 in the morning, May 1st, 2019. That's the opening date for Beyond Meat. And here we go. These are our transits. These are our natal transits. This is the moon transiting the natal position of Jupiter. And all of the aspects, not just the trines, not just the squares, not just the quintiles, but all of them, all right? And let's look at the moon at 2 cents. Remember, we're in summer, so GMT 4, or -4, moon. All right. And so what were we looking for? When we get a natal transit, we're looking for a return to the moon's position, and we're looking for it to happen at the ratio related to volume, right? And so if we're jumping up here over the 1-by-1 on a 4-minute chart, we could technically be moving up to, rather than being at 2 cents per degree, we could be jumping up to 5 cents per degree as it crosses the 50%. So let's set that up. Actually, I already had that, right? So we can just, which one do I copy back and forth? Let's just get these. I can just right click by hitting, I hit control and then just regular click on here. It's choosing all those tools, and then I can hit copy selected tools. Okay, maybe not. Should come up there on the left. Yeah, copy selected tools. I'm just going to copy those over to my other chart. So I'm just copying all of our different geometries of the moon and the intervals, right? And let's get rid of the ones I made. And so let's see our $1 per degree. Sorry, not $1, our 10 cents per degree. We've got our moon. What is the moon? I do not see the moon. That is interesting. Okay, it's not showing it to us. Must just be glitching a little bit. Let's see, 0. 0.02. There's the smaller one, 0.1, 10 cents per degree. Okay, there we go. And you can see that as we get that crossing, that's what I was trying to show you. Sorry about that. We have this this transit here. We see the transit of the volume bursting up over 50%, getting up above 5 cents per degree, even to the 1 by 1, which is 10 cents per degree. You can see it jump up to that moon, right? Now we're moving over here and we're looking for a connection to this level right here as the moon, gets its lunar transit. Now we don't see a direct connection, but we did break the 50%. So let's see the first target. Let's get rid of just for now, let's get rid of our harmonics because we don't need them now. And you can see actually it's working out to about 50% in there. Now, what actually happened is that it jumped up quite a bit here, probably even to the next stack up here. Let's go copy this tool. Let's get our next level up of volume. Just add a 0 to the biggest level. You can see that basically we're up at even 20 cents. So let's see what that looks like, just to see. It might just be that basically what's going on here is that the market fluctuated so much. Well, look at that. There's our 20-cent line. There's our 20-cent moon, right? And we have that spike basically at the time it breaks the 1 by 1. It shoots up to the $2 moon, or sorry, the 2 by 1 moon, the moon that's set to 20 cents per degree. Now let's keep this. Let's set it to 20 cents. Let's just name it 20 cents, and then let's recreate our 5 cent. Where? 0.5. And so, I hope you realize, basically you can be creating these on the manual charts as well. .5. Let's see, what was my 0.2? Okay, there's our 2. Okay. You could see multiple ratios at once. You just have to be able to realize what you're seeing is, the 2 at once and how to differentiate between the 2 so that when the volume hits the certain level, that certain moon line becomes activated. So let's say if we were here at our 20 cents per degree, well, the only reason that we're hitting this moon line right here at this time is because the volume jumped above 20 cents there. And we also get a connection here where the volume is jumping up towards the 20% level on again, as a 4-minute chart, right? It's a little faster. This probably wouldn't happen on the 1 hour chart. You won't see that spike. Maybe relatively overall, the volume is much higher, but we're not seeing these same relative 1 by 1s broken on the higher levels of higher time frames. So let's move on here, okay? Now we have a square and also a biquintile there, and we're not seeing a connection to the moon. And well, we're set to 20 cents per degree, and well, where's the market? Volume's way down. Maybe under $1, sorry, the 1 by 1, which is 10 cents per degree. So let's see that. Well, the 1 by 1's up there. And, actually on average, our volume, well, where is it? Even, happening overnight. So it's very low volume in general, but also into the end of the day here, you're still relatively low volume, really under the 50% mark, which would be not even 5 cents per degree, but let's see 5 cents. Okay, so you're here and we move down towards there. By the time we get to this aspect, it hits the 5 cent moon, right? I think you're getting my drift here, that in this lowest moment, 2 cents per degree. And you see a connection to it. You get a movement. Let's see here. Let me just clarify this, get rid of the squares, rid of those harmonics. A little too much information when you see this like this, when you're just looking for the moon's position. And let's make sure we've got our 0.2 level of 360 degrees. So this is 360 degrees. This is 360 degrees up here. as the square occurs, it's basically the moment also where the moon is crossing 0 degrees. So you have a little bit of something else going on here, which means that this price level right here where the moon is crossing is actually attracting the price as well. And so you actually get this square come in here, basically right in the middle of the two moon lines here. Let's see, making sure I got 2 cents per degree. And you know, overnight, the dip down, 1 cent per degree would be somewhere in between, right? We already know that. I mean, it's up to you whether you want to be charting these things, seeing them like this, or just understanding the relative connection between the volume level, right? So there you get that exact connection to the price level right after the square at 1 cent per degree, right? I just changed this moon line down to 1 cent per degree. And that's because it happened overnight. But as soon as the market comes in the morning, whoops, just deleted that. Once the market comes in the morning, it fluctuates up again. Oh, I lost my spot there, sorry. That was our square, that's our recent time. Well, we can move now into more recent time and see the current market movements, right? So here we are, very low volume again, below that 1 by 1 that we created, only in this highest spike maybe. So let's see the 10 cents per degree. You can see there, into the weekend, we're hitting the level of the moon that happened on the weekend there. But here, by the time we get into the next week, volume has dropped off again. We're not at that 10 cents per degree anymore, so we need to see 5 cents. Well, 5 cents is even further away, right? And now maybe it was trying to get up there. Let's see 5 cents. Make sure it's at 5 cents, yep. And so even though it does try to get up there in the morning, and that's the 9:30 bar right there, right? We get this tapering off of volume immediately. And so you need to see that sustained volume in order to keep continuing upwards, right? If the timing of the aspect is here at the end of the day, and you get the surge in volume before the aspect, well, the target has not been sent yet, in a sense. We don't have this target yet in mind, or as the actual target. It starts to move towards it. You could literally take a trend line and draw it from the low that comes in on the weekend up to that target and watch for the price to stay above that line. And if it breaks below, it's also a sign. We'll look at when it does break below that trend line, when the average breaks below. And now this geometry is no longer supported and we can move down. It's 50 cents, sorry, 5 cents. There's our 20 cents per, is it 20 cents? 20 cent working out well too, but it's by chance. And also realize that the 20 cent per degree geometry is also sort of stronger than all of the rest of the geometries. So literally, if you had a call here for something above here at 50 cents, and 20 cents is sitting there, that means that you need to see a break above 20 cents per degree in volume in order to break through this to get to your 5 cent per degree target, which means it's not going to happen. So I hope you see it's essentially like, you know, an opening and closing system, a valve system. As the pressure of the volume breaks upwards towards higher levels, these different levels of geometry are broken. And as the actual breaks occur, you see the breaks in price levels as well. And they'll break through the different geometries available. And so here we have a quintile. Well, look how low the volume is. So this 5 cents per degree is no good. 2 cents per degree, our next volume. Well, that's it, right? Getting that connection. And you'll find, I think, that stocks, you know, they'll work great, but you know, the fact that the actual moment that the aspect comes in is at the end of the moment, at the end of the day, and then the low volume comes in, That's the reason why it didn't actually get up there to that price, is because of this lull at the end of the day that happens and those aftermarket hours. And so there's a bit of a more of a push and pull, a pressure gauge here going on where, you know, even at the end of the day, a 1 cent per degree might have been working out. Oh, there, actually, we're at 1 cent per degree. What was 2 cent per degree like? Okay, yeah, a little higher. And then 1 cent per degree. Let's just clone this so I'm not switching my numbers anymore. That's when you start to run into problems. I hope you can see the connection here. And I hope you realize this is fast, you know, but it's day to day. This is 1 day, 2 days, 3 days. And you're coming into this day here, let's say. Well, you've got your target based on maybe $1 per degree, 10 cents per degree, and the lower levels, right? Which are pretty easy to work out. Right now I'm looking at 1 cent, but as we come into this day, we can be looking at the previous levels of volume. We're going to look also at now laying some planetary lines on volume to help us determine where the volume should sit, okay? But if we're going to be generally sitting maybe at the 50% level, we can set up for our target at 50%. But if I already know that my $2 per degree level is there and I'm below it, I need to know that I need to see a break in volume above 20%, which did break above 20% there. And look at the break of the line, but it didn't sustain immediate falling back. The average did not sustain and was stuck below the $2 per degree level. Okay, so you can be seeing multiple things at once here. What you do is you set up into the day, you set your levels, and you decide what's the more general direction of where the targets are. Is it up or down? And we're either long or short into these days. And we have targets. We've got one here for $2 per degree, or 20 cents per degree, but I've got one here for 10 cents per degree up here. And I've got one here, 5 cents per degree up there. And I need to see a movement of over 20 cents per degree in order to get to those higher levels. And so I'm here in the morning, break above. Well, my target's up here for the next level and up here for the level after that. If I see the breakdown in volume immediately, I know that it's coming down, and I know that it can't break below or beyond the $2 per degree geometry. So now once it settles back down and we're in this range, now I want to see, as I come to the next aspect, which is the next day. So it's not like it's so fast, right? But you could technically, instead of having just the Jupiter transits, you could have all the in-between transits as well. And that's going to give you a more, complete picture of all these movements up and down and away from the line. And so it's simple in Optima. I can even just remove the orbs, right? Because I don't really need to see, I just need to see that point in time when the moon hits. Just need that point in time. And I can see then, I can just copy this, paste it, and let's see the moon with Saturn. I'll make it orange because that's my color for Saturn. And now we've got that alternate cycle to look at. And we can do this with literally, since we're on a 4-minute chart, well, why not try all of the major longer period cycle planets like Jupiter, Saturn, Uranus, Neptune, and Pluto. And then you can see the relationships to the faster ones if you want even more relationships. But it becomes quite cumbersome, a lot of stuff going on. You don't want to overload yourself, but maybe just another alternate cycle copy. I like with a tech stock. Beyond Meat isn't a tech stock, but funny enough, it's kind of a tech stock because it's a fancy technology anyways. So let's go here to Uranus. We want Uranus for tech stocks. Planetary aspects, natal transits. Oh, I'm looking here. Okay, so my natal transits, I've got my Saturn and my moon. And this one here is my Jupiter and my moon. So let's copy this. And let's get Uranus as well. I like to make Uranus yellow. All right, give you another alternate pivot point, right? And yeah, we're looking for turns. All of these are piled up on top of each other because they're happening over the weekend. Okay. Over the weekend. And maybe you need a couple more. Maybe you want to just see all the planets. You want to just keep going. Instead of Uranus, let's see Neptune. Go gray. Just like we did with ADA, we could look at all of the natal planet relationships, all of the degrees of the natal planets mapped out, but also we could look at not just the conjunctions like we were doing on ADA, but we could even look at all of the aspects. And we could look for a connection to the moon directly relatable to an even closer in volume at that exact moment and see if we can find a connection between the moon and say something like natal Uranus. You know, like let's look at this quintile right here. This is moon quintile natal Uranus. And now let's take our moon lines, and they're just set to something like under 50%, right? So maybe $2, or sorry, 2 cents per degree. And look at here, it hits and it moves up to the moon. Let's see also though, what's the degree of natal Uranus on the day of May 1st, 2019? So let's take a look at the ephemeris real quick. 2019, May 1st, that's the natal date. And we can look at 9:30 a.m. for the opening clock. Okay. And you've got here the natal position of Uranus we're looking for, 33 degrees. Okay. Now, we can go in here. Now, I've got a natal position for Uranus of 33 degrees, but this is a quintile. So we can look here. First of all, the next position is a sextile on Uranus there. So we know that we're actually here, although this is a quintile, this is now moving towards the conjunction. So this is 72 degrees from the conjunction, meaning this is the 288th degree of natal Uranus, right? 288 degrees from natal Uranus, not 72 degrees from natal Uranus, 288 degrees. Okay. Conjunction is somewhere in the future. Soon we're already beyond the opposition. So this is the 288 degree quintile. So let's take a look at 33 degrees plus 288, 321 degrees. Let's use our degree interval tool here and punch in 300, was it 300? Sorry, I just went blank, 321. Disappeared on me, sorry. 321, we'll make it yellow because I like Uranus to be yellow and I like it solid like that. You can see there. So at the moment of the quintile, we are 72 degrees from natal Uranus at that crossing. Okay. And where's the volume? About 20%. What are we set to? 2 cents per degree. So basically, you're looking for that exact kind of information to play out for every single one of these transits. And you can see here, well, this was technically coming up to this point here. We have a sextile now. So technically, yes, 60 degrees from the natal position, 33 degrees. So we can just say 333 because it's 300 degrees from natal Uranus. You can see here at this moment, that's the target, okay? Now what happens here? Set to 2 cents per degree, we get a little bit of an influx in volume here, okay? So let's just take a look at the alternate geometries. Rather than 2 cents per degree, let's see 5 cents per degree. Okay, we're seeing no connection at all to the moon at 5 cents per degree. Let's see, 10 cents per degree. It's even higher up there, right? So we're not seeing a direct connection to this increase in volume. As a matter of fact, it's really just sitting basically at our 2 cents per degree and doesn't quite even make it there. And well, what happens? We have a big flush down here. The aspect occurs, we get a spike in volume, we start to move towards this target, volume disappears and starts to move down. But truly, I would anticipate it to try to get up to that level. And let's see the difference. Where did it make it, and where was it? Where were we planning on seeing it make it? We're trying to see it make it all the way up to here at 136. It makes it to $135. So how close do you need to be? That's the question. All right. How close do you have to be? At that moment, volume disappears. Look at that. You can actually see that dip in volume. And well, what does that mean if volume has crossed down below the 20% right in this point? First of all, this target is no longer there. It's actually the one lower. It's 1 cent per degree now. Well, 1 cent per degree. Oh, it still didn't even make it, but it actually was on 1 cent per degree when it occurred. So that's also pretty interesting. Okay. All right. This movement upwards, it's trying to get to its higher target of 20 cent per degree. The market doesn't quite make it. And maybe there's another transit here. Maybe there's a flush down transit that we need to see the alternate cycles. We can see, did I pull up Neptune yet? I don't see any Neptune. Oh, I do, there we go, the gray ones. Yeah, let's see Pluto. And since we're looking at, I like purple for Pluto, like a deep purple. Let's look at the sun as well. Let's look at natal, the moon transiting natal sun. Okay, I'd like to make that a pale green. High coming in there on the natal sun, quintile, getting that weird no volume moment because of the after hours high, right? So knowing that the high came in on the after hours time, well, I mean, obviously you need to look at after hours, right? So beyond here, there's lots of things to do with this information. Obviously, the more aspects, the more dates, times that you could come up with relatable to events that could be related to the moon, full moon, the phases of the moon, the different crossings of the moon through this ephemeris, not just when it crosses over the natal positions of the planets, but also when the moon crosses through. Here it crosses 270 degrees, when it crosses 180 degrees, when it crosses 90 degrees, we should see a relationship of price and moon. And so we can trace that effect in so many different ways. We can see it this way, like we've done. We can plot a time and we can know where the price target is. And we have to monitor the volume. We have to see if volume is going to follow through and continue our trend up to the actual target, or if we need to pull our stop or pull up our stops and take profits in these tiny little movements that we're basically predicting with the moon, right? Now we can take this further and we could basically say, okay, there's this other set of lunar relationships, like I was talking about, not related to these natal positions, but through the moon crossing the ephemeris. And what are the levels that we look at inside of the ephemeris that we watch for those crossings? Yes, we're watching for the cardinal cross, the 90 degrees, the 180, the 270, the square and the triangle. We're looking for these moments here. So we are looking for these points in price as a degree, okay? The triangle and the square on the circle. And that's what we're looking for here also. And that's why I have those lines set up, but you can't really do it all at once, okay? And there is a way to, rather than, especially if you've got a program like Optima where you can see a graphic ephemeris, and keep it in sync with your chart, and then basically drag and move the planets around and see them make relationships to these points, well, there's a special sort of code that you could use rather than using all these natal positions. Or with them, if you do want a more complete picture, the logic you can use here is this. If you watch for your natal positions, the transits of the moon to the natal positions, and the aspects that they can make, the other angular aspects or transits, you should be seeing a relationship of the price to the moon. Alternately, we can see the relationships of the angular relationships that the moon makes to these Gann positions in price as degrees, and also calling for a price away from the moon. So technically, you've got two processes here. You've got your natal transits, which pull you towards the moon, and then you've got your lunar transits relative to the Gann dates, which pull you away from the moon and to the Gann dates as degree. So let's go through that a little bit. I know it seems a little mysterious, but what we want to see always in this case is the Gann dates as degrees, obviously. So you can see them here. They're listed as dates. Okay, you could see them as vertical lines here on my daily chart. Okay. It's just all of these dates here as verticals that you see put onto the circle, March 21st being 0 degrees. You can see a marking of March 21st there. May 6th, 5-6 right there. June 22nd, that's the 90-degree mark. Well, that's our solstice. Sorry, our summer solstice. We get a high there. So you can see basically that just the turn dates of the Gann dates are wonderful. You can use the sun relative to these. We've already learned how to draw the sun in our beginners classes, and also I have a sun only webinar that I did previously that if you haven't seen and you're interested in, let me know. But if you've done that with me before, you realize that this, gives you a clear picture of the daily moves. You can see the moon, the sun as a degree of price, right? But this exact same process works with the moon as well. We were using the sun in a particular way by laying them out and showing the different harmonics, the square harmonics, right? Well, in this case, we're going to use the moon transiting through here, making relationships not where you see these relationships. What you're seeing is the actual relationships between these dates. Now we want to see the relationships to the moon to these dates. And the special relationships I want to see, I don't want to see the squares, I don't want to see the trines, I just want to see, I'm going to go into here, I want to see the quintiles and the biquintiles, the 72s and the 144s. Now, think about what you're seeing here, please. Try to envision it. An ephemeris should be like this, where we've got March 21st on the left side. Sorry, I just want to make it a little more accurate. Okay. So yeah, 0 degrees 90. Okay. So this is the way it should look. And you've got, like I said, if you had those trines and squares, those dates connect as a square and a triangle on the circle. But we want to remove those relationships because we don't really care about those static relationships right now. We want to see the moon transiting through. So let's take here, let's get our yellow line. Let's move our date here. And let's see, we want to see the moon crossing through the ephemeris and making a biquintile relationship here to September 23rd. And then as it goes through, it makes a quintile relationship here to May 6th. And what we're going to then look for is a relationship to the price moving from the moon to the price level of this date. The price level being, if May 6th is a price level, well, a price level related to May 6th solar degree, 45 degrees. May 6th, when the sun is at May 6th, we can actually show that. Oh, I guess maybe not on this chart, but anyways, not on an hourly chart. But if you moved the ephemeris to May 6th, you would be at 45 degrees of the sun. And so here we are approaching 180 degrees of the sun in September. You can see the sun here at about 161 degrees right there. You can see just at this point here, the sun is also going to be quintile to June 22nd. So that's sort of when we see the sun actually make angular relationships to these dates, these Gann dates. This is important, but probably a bigger move is coming, relatable to the daily ratio. If we're working at 10 cents per degree or even 1 cent per degree on the hourly or below on the 4-minute chart, well, on the daily chart, we might be working at $1 per degree with the sun, right? And we might see a movement relatable to a higher ratio relatable to the sun. So we keep an eye on that. But day to day, what we can do is actually remove our transits for now. You know, remember, we can look back at them and we can see when is the moon going to be where the price is? At the natal transit, right? But when is it going to move away from the moon? When is it going to kind of bounce around to other places? Well, let's go back here a little bit. Let's pull back. Let's go just to some random low here. And look at how the low here is also relatable here to the sun. Okay, biquintile to the sun. In this case, the sun is biquintile to March 21st. Okay, and so where's the price? Look how the price is at what could be close to 0 degrees. Now, that's sort of arbitrary, let's say. It kind of comes back down here again anyways. Well, that's because this is the sun, and the sun is going to sit here biquintile for quite a while. If we can going to see a relationship to 0 degrees when that comes in, when the sun actually moves into the biquintile, but you can see that it's biquintile to 0 degrees for quite a few days. And so more than likely, we're going to be dealing with a higher ratio for that movement, like I said, and we'll see that a 0 degree level on a daily chart is, you know, it's much more relative to the fact that in this time here, in this big chunk of time when this aspect is occurring, when you see that happening, the price is moving towards a 0 degree mark. And here is the point that it actually hits, okay? Just after there's the weekend. You have your, oh, actually, this is not the weekend. You have here, that's our end of the day before, and then overnight somewhere we lose the transit. But here we are moving towards 0 degrees when there is no other lunar transit, but we can move on. So this is the point we chose. Let's look for the next point when the moon makes a angular relationship. So at this exact moment, the moon, at this exact moment, the moon becomes biquintile to 0 degrees. What happens? The price drops to 0 degrees. Continue on. Moon conjunct to the sun at that moment. Moon crosses the sun right there. Okay. Well, that moment I would anticipate also possibly the price moving towards the sun at this exact moment, because we know how we had this biquintile right just before that hits, and the price jets down towards 0 degrees. But also at that exact moment, in that same kind of motion, overnight, the sun and the moon are conjunct. Let's get the sun line on here. Right? Conjunction, that means the actual position of the sun. Look at that, right? There's the crossing. Well, where's this price, right? The price is at the crossing where the moon and the sun are meeting, and then it jets downwards to that 0 degrees. So it needed to sort of satisfy the closer thing that was going on. And also the fact that the sun and moon are becoming conjunct. Well, let's look at our lunar phases. You could just punch in moon phases, right? Right. There's our new moon, right? When they're conjunct, when the sun and the moon are conjunct, it's a new moon. And we're looking for a relationship to that exact point. And you can see that the price gets to this price right here, 125. The price that we were looking for is 125.38 at that exact moment, okay? We're not really changing our degrees here. We're basically set at 20 cents, or sorry, at 2 cents, this 20% level. We know that on you know, on average, 20 cents is basically a good average. It jumps above to 50%. On the lower moments, it drops down to the 10%, but it finds resistance at that 20% quite a bit. So it's a good average to look at. But as the market fluctuates and these relationships occur, you need to jump to those different relationships, right? So let's take a look here as we get beyond the new moon. Well, now we've got a quintile to November 7th. November 7th being 225 degrees. From this moment, the low, we find the low, the moon here, right? The moon is here at just over 150, sorry, yeah, 150 degrees. Okay. And as it's crossing, we get this movement upwards. And look at the high here coming in. Where was the percentage, sorry, the degree that we were looking for? 225. As that quintile comes in, where's the low come in? At the moment of the quintile, right there. I'm just trying to get that exact moment. See where the quintile shows up there on my ephemeris? It's right on the low. And now, as we move in, we get the high coming in at the thickest moment here. You see how this orb is growing here. It's showing me the thickest moment, the moment it's brightest, that line. That's when we're at the actual quintile moment. 71.8 degrees, you can see it's as close as you can get basically. And that's the high at 225 degrees. So basically you're looking for a relationship of as the moon crosses over these points, it's also making an angular relationship to the Gann dates. And now I continue on. Well, there was something overnight there. I could actually use a slider here and just bring it here. And let's see our slider overnight. We had a quintile to June 22nd, 90 degrees. So we, at this moment here, the end of the day before, we had that quintile, it ends just about there. You could see the market is basically sitting back onto the sun and the moon, right? From 225 degrees down to the sun and the moon, it's sitting there now. And then overnight, oops. Sorry, it just jumped on me. Okay, there's our sun and the moon, sitting on the sun and the moon. And then overnight, we get that shift where we get the moon quintile to June 22nd. Where does the price set go? There's 90 degrees right there. So as the moon becomes quintile to 90 degrees, the price moves to 90 degrees. Let's continue on. It's really fast, right? It's overnight. Here we have now moon quintile to November 22nd, which is back upwards. November 22nd, 240 degrees. Well, look at that. Where's our high come in right at that moment? 240 degrees. And you can see the influx in volume there. We might have to see what was 240 degrees at a higher ratio, maybe of 5 cents per degree, or 240. Well, didn't quite make it. Not quite there. Well, our volume really didn't make it to 50% either. You know, there is a case to be using 4 cents, which would be double from 2 cents. Sort of just using the idea that if you're growing in volume, you'd be breaking upwards. So you're doubling 1 to 2 to 4 rather than 1 to 2 to 5. And then if you were breaking down in volume where it's breaking down, you would be halving. So you would be going downwards from 10 to 5, and then technically to even 2.5. And then it becomes a little bit too much to use so many decimals. But there is a case for a 0.4, but you know, technically just the idea that the momentum is upwards here, even within our our 2 cents per degree, right? Breaking the 20% there, 2 cents per degree jumps up to 240 immediately. We can move on now. So let's just see. Let's bring our slider here. Since we could slide through the 24 hours, see the next relationship. Oh, look, moon quintile to February 4th. Well, that's interesting because this jumped upwards, right? We saw this jump upwards. The next target at this moment, when you just saw my cursor hit this moment right there, we're looking for the price to be at 315 degrees. And where's the price? 315 degrees. So let's move on. Guys, this is, I'm looking at one market here, but you have to be able to sort of believe that, or you have to be able to test this stuff on your own. You have to go in and see this on many different markets. I've done this with so many different markets. I've traded this with a student with Tesla. I've traded a student with Bitcoin with this exact method. Do I have my student here? No, she's not here, but she is. She's going to get a copy of this video. But she was just doing this with Tesla with me recently, and the results were perfect. Again, this is the Gann dates in relationship constantly to the moon and the sun. And you can see recently there really hasn't been a relationship in the times that I've been showing you where the moon, the sun makes a relationship to these Gann dates. And again, that would be a bigger moment. So now we've got the moon crossing here, 180 degrees. Well, where's the moon? 180 degrees, where's the price? Jets downwards to 180 degrees. Continues on. There's the sun quintile to 225. Well, where's the price? 225 exactly. And you get this bigger spike at that moment too, right? A more violent spike because it's the sun. And the market didn't really do much more there. It didn't even fluctuate over to the 50% very much, so it didn't really merit looking towards a higher ratio. You continue on, and you see that when there is no relationships to be made, the lull that occurs and the low volume could also be in this time when there's no relationships to be made here. Well, first of all, you can see that it's finding highs on the sun, and the sun is quintile to the November the 225 there, we know. So there's this aspect of the sun being, an attractable force here. But also, you could be dealing with your smaller ratios, 10 cents per degree, and dealing with a moon down to 1 cent per degree even, and finding those square outs in between here with all those natal transits, So if you don't have calls that are being made here, well, then you can use them elsewhere. Well, here we have now the moon up here, all right, is now quintile to 180. Where's the price? At that exact moment, it tries to get up to 180. It finds resistance at the sun. Continue on. Remember, I haven't changed my ratio very much. It's because this volume is so consistent in here. Why are we moving at all within here? Well, it's basically in relationship to this moon moving through these dates and making quintile and biquintile relationships to them. I know it seems weird, but if you took my solar degree, my annual solar cycle webinar, you might already know that we were dealing with these quintile, the 72 days, which is technically like 72 solar degrees. And we were finding a relationship of highs and then moving them and transposing them to the solar line, or lows transposing up to the sun line and over and finding future highs 72 days later. It's a very similar process of what we're going through here, but with the moon. Okay, now let's see this big moment here, this big spike in volume recently. Well, look at that. First of all, the moon and the sun. First of all, the sun is still quintile to November 22nd. Oh, sorry, November 7th, which is 225 degrees. And this big spike in volume increases our ratio. So let's jump up. Let's go up to 50 cents, or sorry, 5 cents. Well, look at that. Look at that movement up to the moon, up to a level that could be associated to the moon. Let's see our sun level. We know that they're close together at this moment. Right? There's our sun level that it's finding resistance at as well. Well, here, this is that movement. We're looking for a relationship to the sun and 225 degrees. Well, look at that, 225 degrees just one level of geometry up from where we were because we broke over the 50% line. I hope you guys realize I don't trade Beyond Meat. I've never set up this chart before. I literally set it for you live. And it works perfect, right? It's just about finding this logic of a connection to how you can fluctuate these geometries and why you would, okay? As the market comes in here, well, maybe there's a reason. I would look for things like the moon being an aspect to these dates as being days of higher volatility. So look for those days to be the days where there's a big influx in volume. When the moon and the sun are also in aspect to each other, that would also be a time when I would expect a turn and possibly a spike in volume. All right. So this technique, I think it's possible, sorry, losing my voice a little. It's possible to do this with solar fire or any other ephemeris, as long as you can watch this, the sort of daily position of that moon, and as long as you know where these spots are on your ephemeris. Well, it's so easy, you already know where these points are, but you need to do this math manually of finding when the moon is you know, biquintile or quintile to any of these points. Now, technically, you could work all of that out beforehand, obviously, but the moon and the sun being biquintile to each other is also something you need to watch for, and that would have to be manually calculated, and that's actually quite difficult to do, I would say, to be honest. It's not the easiest thing to do manually, okay, to track that exact aspect. But it's possible, no question, okay? So going on, you continue on, and you would basically just map these moments out for yourself. You know, here we have some connections down low again, back to 120, back to 45. Here we have a fall down in volume though as well. So we get this movement downwards to 90 degrees. It hits 90 degrees, right? Our call of 120 works out, and we get even below it. We're going to 45, it doesn't quite make it. Well, we're set to that higher level ratio. And immediately just beyond this point, when the sun is no longer in aspect, well, that's when we start to see that reduction in volume again and the relationship to the lower level geometry again. And let's see the levels that it falls to. Well, there's our 45 degree, and you can see it actually bounces at 0 degrees. And now we're looking here, the moon in aspect to 22, this 22nd of December, which is 270 degrees. You know, and at this moment, technically, right in there, right? Like the moon overnight was attracted to the lower level, but as the market opens, it's also attracted to this 270 degree level. And well, you know, at that exact moment, it's at 270 degrees. This is 8 a.m. So you're not getting that volume yet. The event occurred overnight to move downwards. We're at the level that's happening when the market opens. But as soon as the market opens, it drops where? To that lower level. But also look at the sun being relatable to 90 degrees here. So a big move as well, a surge in volume, maybe a move back up to the higher geometry. Well, there you go, 90 degrees, right? Sun is appropriately calling the price to 90 degrees at that slightly higher geometry, 50% when the 50% is broken. Now, I hope this isn't killing you guys. It should be proving the point to you over and over again. This relationship that's happening is constant. It's going to happen every day. You can just basically figure out the highs and lows of the day based on where this ephemeris event is taking place. Is the volume going to be fluctuating? Well, is there a solar aspect that day with the moon or with a Gann date? If not, then we can continue to see our regular geometry play out, maybe our 2 cents per degree, and at lowest moments 1 cent per degree. And then on a day when the sun is in aspect, we might jump up to our 50% levels, our 5 cents per degree, and maybe our 10 cents per degree at the highest levels. And we're just looking for those relationships. The highs of the week or the days will come in at the highs of the ephemeris when the moon makes a relationship to these higher degrees, when the moon is in aspect to, say, something like 270 degrees right now, it's bullish. But technically, you can see that that relationship truly happened overnight and really was already satisfied on this lower level geometry, 270 degrees at that moment. Basically, the market is there. So let's just continue on. The next call for the moon into the future here, going down 230. Well, I guess we're up technically right now. We're at 90 degrees of our 2 cent per degree. So it's technically like a bullish call technically, but it's more of a flat call. We're looking for probably a relationship to hit the sun, find resistance at the sun, and fall to 135 degrees here. We're also being retracted to this 90 degree by the sun here. So not really bullish, not really bearish, but that's our targets for this period of time. And if we were to see a fluctuation in volume, well, we might see a movement, could be relatable to this level, right? Up to these levels, but 135, notice it's not very far away. Now the other information you might have, if you want the full story, you might just be long into this day hoping for 135 and possibly maybe an attempt to break over the sun and get up to the moon. And why would I get up to the moon? Well, do I have a natal transit? Right? Well, down here, I've got some natal transits, but technically the moon is right here. The closer call is closest to this moon. We're really already at the moon line at this lower level. But this is overnight data, quite low volume. Let's just see the 1 cent per degree. It's right at the moon there. And we're getting a movement up. Well, look at that. We're now here at 240 degrees. So technically bearish into this lower level geometry. So technically, coming down and trying to get to 90 degrees or 135 degrees on 1 cent per degree, we are moving from $132 down maybe to $130, $129 maybe at most if it spikes down. You realize if you're dealing with margin would be the only way to trade an event like that, right? You'd have to be at least 10x or 100x probably using futures or options. But if we are at the 20 cent per degree, you're basically flat. But we do have this lunar transit here. So maybe we fall down to the moon here. If we see a break up over 180 degrees, the moon is up high right now. We're going to be looking for the moon's relationship to crossing 0 degrees soon playing out. Are we not already at 0 degrees? Maybe. But if we get above the sun soon, I can see us moving to the higher level moon, which would be, a good move if you were trading intraday, 131 to 136. Okay, and that's how you would work it. You'd put a little X there, and maybe you have a trend line. Really simple. Put it to the low, move it up to the target. You see the line break. When the volume breaks, well, that's going to happen. It maybe happens. Maybe from the other low, you would also take it and place it here and see for those lines to kind of work out. Just like you might have a fan, you could put a fan from the low. Okay. Oh, actually, we should have been over here because that's where the moon actually crosses 0 degrees over here. Okay. So if we can actually, sorry, those trend lines I just drew were wrong. This line here would be our target. You can see actually it's continuing up right now, and we'll look for resistance at the sun around here. Right around the time there's a lunar transit with Jupiter, a square could push us down to this lower level, or it could push us up. This moon, the sun is still 90 degrees to the June date here, and it's kind of increasing here. It's getting closer and closer to the actual quintile here. We're at 71.8. 72 is probably right there. 38. Yeah, so basically looking for 90 degrees as well to sort of be attracting the price at this point. So a movement up here and then down to here could be a bit more than possible. And you can see that kind of thing happening all the time. So we just sort of map these things out, and as the market shows us where the volume is going to be, we continue in, we get a little closer, and we map out the next few targets for ourselves. And we use a simple system to keep ourselves safe. User stops, we might put a buy here, maybe put a trading actual, I can put here a trailing stop. This could be set to a percentage, right? Maybe I only want to lose maximum 1% or 2% if I'm trading with leverage. Okay, and that would be 2% constantly. And if my stop is just there, and I have this as my trend line, I'm long and I'm waiting for this target up here. And if it drops below this to this 2% level, then we're out and I'm safe. But if it continues up, I could also continue to put my stop up 2% below this red line and continue up and see if we continue to stay into this trend. You can play it like that. Kind of things that you see the stop doing here could be happening here eventually, especially if our targets are up. Now, we also have a target downwards here. So technically, if you wanted to, from the high, you could pull a trend down to this target and see, and technically that's also playing out right now. So this time right here, in between these transits, that's a right time for some change. Okay. You would just sort of monitor the moments. I mean, this is a 4-minute chart. It's fast. This is the day-to-day stuff. This is where, if you like trading every day, we'll pull this stuff out and you've got basically levels every single day. Look at the levels. They don't fade. They work all the time. The geometries never fail. The price will be attracted to the moon and the sun constantly, especially on average. It's constantly riding the moon and the sun and moving towards them, moving between them. When does it move between them and towards them? When special relationships happen between the moon and Gann dates, or the sun and Gann dates, which pulls the price away from the sun and the moon and to the Gann date. So it's a different kind of relationship. It's like that opposite relationship of transits pulling us towards the moon, and then these relationships pulling us away from the moon or away from the sun to the actual price that's related to the Gann date. So that should be enough of that, I think. I don't want to go any further. I don't want to harp on it, but try Gann Trader, pull these charts out that I give you and start laying out an intraday chart, okay? It's very important. This is, I mean, I don't like to be so absolute about things, right? I like to say, well, anything can work if you've got your own system. Don't go away from it. Keep up with your regular TA, your regular analysis. But I think that you can get my drift here when I say that these transits and these aspects and these Gann dates, I mean, this is what's going on. The other effects of you know, what indicators show you, RSI, any kind of a special indicator that you might have, this is what's happening. And then those things show effects of these things happening. Now, if you have a great volume indicator, something that shows you when volume levels break, maybe a momentum indicator for volume, that might help you in determining when you're going to increase your settings. But also, we can apply, just like we have planetary lines and moon lines here on our price. Let's copy that and place it on our volume and check this out. And I'm going to move over to another chart soon, but I just want to show you this. Got Gann planetary lines, and I can lay it on my volume layer. And then I'm going to set it here. This is a 4-minute chart. Okay, first of all, I just want to stop my computer from glitching. So I'm going to set it to like 10 million because we know we're in volume. And, okay, so we know that basically what we're doing is we're setting the Gann planetary lines now, which before are set to, we know, $1 per degree or 10 cents per degree, and that's what you're seeing on the chart here. Well, if we lay it on volume, we know that the numbers are highly increased. The numbers that we're reaching for here are 66,000, right? So what if we want to fit 360 degrees of planetary price onto the volume levels of 66,000? Well, what I can do, I could take 360 degrees, a level of 66,000. I'm going to divide it by 360. Did I do that right? No, I didn't, sorry. Take 360 and we're just gonna divide it by 66,000. There we go. So this number of 545, 545454, that's our ratio, okay? That's our price time ratio to fit 360 degrees of planetary volume this time into this box. And we wanna see where, you know, if this is the moon, we wanna see the moon cross 0 degrees Aries at 0 of volume. And we wanna see 360 degrees cross at 100% of this time frame, which we know is 66,000. So I'm going to set this to be this ratio of about 5454. Is that it? No, it's 545.4. Okay, now let's take a look here. We have here, let's take our astro positions. Well, actually, we could just take a look and see the moon. Well, the moon here crosses 0 degrees Aries there, and then crosses 0 degrees Aries there. So we're actually one level too high here, because you can see that we're crossing higher levels. We're not, the moon is not crossing 360 degrees properly within this structure. So we want to see the 0 crossing in the same spot. We got it there. But we want to see the 360 degree crossing of the moon, one full lunar cycle in this structure of 66. So I believe it's that we're just going to have to drop it 1 decimal, 54.54. Let's see. 360 degree, did I do that right? Let's get that math again, sorry. Let's just take 360 divided by 66.54. Am I doing that right? Or should it be the opposite? Should it be 183? Sorry guys, I don't often work like this, but we'll get it. Basically, I hope you, 183, is that right? 0 degrees. And 100% up here. 0 degrees. So we can see the crossing. Okay, there we go. That's proper. Okay. Sorry, I was pulling the wrong ratio there. We had to take our position of our, you know, the 360 degrees, right? And we had to divide it by the amount of time that we wanted to shove it into. So, or 66, the level of 66,000 is the 1/1 of the volume for a 4-minute chart, okay? And we wanted to fit our 360 degrees of planetary price into that 66,000. So we divided our 66,000 into 360 degrees. And that tells us the number we need to multiply 360 degrees by in order to fit one full cycle into 100% of volume. Hope that made sense, okay? Let's just take a look at the volume alone here. Oops. I'm going to zoom out a little bit here. Now, what I'm looking for is a relationship between the moon's level and a crossing, especially of the averages, of those regular percentages, you know, the percentage of these Fibonacci retracements on my volume, which are not showing me the levels right now. There's the higher levels. There they are. Okay, they were just weirdly coordinated strangely. And let's get our sun line and our moon line. Let's make them nice and thick so we can see them on the volume a little more. Okay, those green lines are the sun and the white lines are the moon. And just like price, we're looking for a connection where volume is also attracted to the moon, crossing through levels, just like our percentages of what would be GAN positions in percentage. We want to see 50%. Well, we want to see the volume at 50% when the moon crosses 50%. And also we want to see a longer term relationship to the sun's position as it's crossing over 50%. We might want to see a relationship to, you know, at September equinox, we're going to have the sun at 50%, because that's 180 degrees of the cycle. And if we were to put maybe a slower moving average here, just to see a little more smoothed out, let's get a moving average. Let's set it to say 100, just to smooth it out. Let's make it a little different color here. Let's see, let's make it yellow, thick, okay. And now you can see a relationship to this level of the moon moving up in the zodiac up to 100%, which is 360 degrees, and then back down, and seeing the volume drop, and then moving up in volume as it crossed 75% here, a big influx, and then we should experience a downward motion in volume again. It's almost like the tide. If you imagine the tide of the ocean, you're getting a low point and a high point. It's not just related to the sun, or sorry, not just related to the moon moving through here though, the sun as well. And we can see that point there where they cross. Let's just knock back our tools. There's our volume transparency a little bit. The crossing of the moon and the sun, you can see the average is right there. Okay, let's move on. You can see the resistance here at the level of the sun, right? The slower average, this yellow, kind of staying below the sun. Only when the moon calls it up to these high levels does it have that sort of energy to get beyond the sun and get up there. When does it lose that? As soon as the moon crosses 0 degrees again, and we fall back to the sun. And we continue on, and now we're getting that increase again. Where's that crossing? We see the volume at the crossing. It's continuing upwards. So just like price, right? Just like price, we're predicting volume level with the sun and the moon within 360 degrees, the 1 by 1, this level of 66, which is relatable to our 4-minute. Only if we wanted to jump into different levels, we would have to take that calculation. And whatever, if we're on a 52, right? If we're on a weekly chart and we're dealing with a 52, well, we have to take our 360 degrees of planetary geometry and fit it into a level of a multiple of 52. So we would take our, just like we saw that calculation before, like this. We'd take our 52,000 or 52 million, whatever that volume level is, and we would divide it by 360. And then we would multiply 360 by that number in order to, you know, we would multiply our planetary lines by this number in order to get it to fit within that box. And this is really, really powerful. It really helps you to define volume in a sense that I know it doesn't seem so easy, but day to day, you will find that the level will match these two. There's our new moon again. Move through here again. Here's the crossing here, the moon and the sun crossing. We have the pullback in the volume down here, right? It's usually going to see a crossing there, and now we can see an increase. And if we are above and the market's trending higher on higher time frames, you might need to see this relationship on higher time frames. But seeing it on this time frame is decent for trading this time frame, for trading back and forth day to day. We're going to get more live ratio readings for the actual moments that these events occur. You start dealing with a ratio that's relatable to the hourly chart. Well, these levels of volume will be higher, the volume averages will be higher, and we'll have maybe less fluctuation, but we'll also have less bars coming in every moment, and we'll have less actual moments where those higher levels of geometry actually play out. Only after the hourly bar closes would the hourly bar matter. Okay, so when you're working with the 4-minute chart, you might want to watch for when the hourly close occurs, because you might find that the ratio relatable to the hourly average is actually going to happen instead of the one that's relatable to the 4-minute. So it's a bit of a, again, it's not the simplest thing on earth to trade a 4-minute chart, but you can have all of this stuff pre-built so simply, right? Now, I want to show you a different example of this because you can do this manually. We didn't do this manually, and I'd like to show you how you can do it pretty easily. It's even easier manually because you're not dealing with this tool of planetary lines. You're drawing them manually, and you would just draw your planetary line between 0 and 100%. Okay. But I hope that you're realizing, as this comes through, you're literally looking for the relationship of the moon to be crossing these lines, which are technically kind of like the Gann proportions of the circle. And you're watching for the moon to cross them and for the lines of price and volume to move towards them. Just like they move towards them in price, they move towards them in volume. Let's just quickly, though, go over to this chart, a little more advanced version of that Apple chart that we were looking at yesterday with the moon. Let's go here. No, that's not it. Sorry, I'll get it. This is the one. I'll send you this one. But as you can see, what I did was, let me just get rid of this. Just the same chart that we had. We built this chart yesterday. Okay. But also on the volume now, what I've done is I have my level. This is a hourly chart. So I'm up at 100 or at a multiple of 10, right? So I've got my 1 million. And now I'm putting a sun line starting at 0 degrees on March 21st, because that's where the sun is on March 21st. And now I'm moving this line up all the way to 360 degrees, which is the 1, by the next March 21st, just like here we had this line ending at March 21st. And technically there is a higher level of geometry here as well. There's the higher level of 360 degrees. So we're going up also at a rate which would get us to the next level up 360 degrees. So technically you're seeing two ratios at once here. The lower ratio, which is related to this level of 0 to 1, and then the level that's relatable to 0 to 10, right? But you can see this nice symmetry in volume here, that average moving up with it, with the sun until March 21st, and now down from that date, basically the bottoms of the average following and finding support down on there. And then the anomalies, well, the moon cycle placed within those same exact proportions, instead of being the sun going from March 21st. This is the point when the moon was crossing 0 degrees Aries and going up to 360 degrees and crossing 0 degrees Aries again. This is one line that's set to 2 times that, going up to the 2 million, right? And look how that's playing out. So sort of like the 1 by 1 and the 2 by 1 of the moon moving at $1, 10 cents per degree, and then the moon moving at 20 cents per degree. Or, relatable to the volume levels, in this case, probably 20 million or whatever it is per degree, or no, 20,000 per degree. But you see that idea that, this is the 360 degrees of the lunar cycle. Look at the relationship of the volume. Where do we get those wiggles? Where the cross occurs, where the moon and the sun cross each other. Those are those different levels of the sun. I actually have the sun line not just going up, but from the high, I have an opposite sun. There's the moon, the sun line going upwards here as well from 0, but there is a line from 0 or 360 degrees moving down. It's the exact opposite mirror line. And you see that interaction between the moon and those highs that are coming in on the volume, especially on average. And where did that end there? When the moon and the sun cross there, we get a cutoff. When the moon and the sun cross there, we get a reaching up towards that point. The moon and the sun don't cross here anymore. The fall happens beforehand when the moon is crossing over the 1 by 1 there. When the moon crosses the 1 by 1 there, the volume is there. When the moon crosses the 1 by 1 there, the volume is pretty much there. It falls there anyways right away. When the moon crosses here, gets to the 1 by 1, the volume is there. When the moon gets to the 1 by 1, the volume is there. Same as here. So you can anticipate when you might see those fluctuations in volume and help you decide, well, do I use my 5 cent per degree or my 10 cent per degree? Well, the moon cycle in itself is telling you what ratio you should be using. It will fluctuate. It won't be exact, but it will help you. So that's just maybe a more clear picture of what I was doing on that other stock. But I know that when you deal with stocks and you're dealing with aftermarket hours, the volume levels become less clear to see. And maybe the colors I was using, they may be harder to see. I just found this much more clear to see. You could just continue on with these cycles you would have to find the next times that the moon crossed 0 degrees. But technically, we could take a cycle tool. It's not going to be exact because you know that this cycle tool is set to trading bars and there's weekends and it's just an average position of the moon, right? But we could technically take these cycles and repeat them just based on an average length of the moon's cycle. Okay, and puts it into the past as well so we can move back. I could just copy and paste my moon setup here, the 3 lines, the vertical and the 2 diagonal lines that represent those levels, and just push them over to the next cycle. And you can see that same connection. Click here, click here, click here. Same connection again, right? Always going to happen. It's kind of, it is the tide. I mean, it's the only way to put it. But we're monitoring the tide. If you know how the tide works, it will really aid you in this. But you don't have to. You can just see these levels. All right. So I think that's pretty powerful on its own, because watching for the moon to cross through these moments is always going to bring some violent moment on the price, right? This up, right here that occurred back here, while we're relating it to the end of the lunar cycle and the moon kind of catching this big influx and then falling as soon as the moon cycle is coming to an end, and then continuing up with the new moon cycle, finding some highs here when we have here our moon and our sun coming together here, moon crossing here the 618, moon crossing the 7.5, so, or the 0.75. I think that, just like you would watch moon on the price, why not watch moon on the volume, and you'll just get those same exact connections. And also you'll know when the surges come, and then you'll know when you can expect the higher ratios to occur and the bigger jumps and the bigger movements of price. If it breaks one resistance level of the sun or the moon, look for the next one to hit. This is one per degree, and that's 2 per degree, right? Just goes up to the 20% level from 0 in the time that it goes 1 full cycle. So hope that brings it back around to full circle there a little bit. I believe that's basically everything. You've basically got a system completely of one relating it to the natal positions and just harmonics of particular single planets, or also like with my ADA chart, where you can take all of those different planets and create levels within the boxes rather than just the moments of just one planet. Well, how about all the planets and the moon crossing through them rather than harmonics of all those points? And then also a full system of reading volume, which also helps you find turn points when you find that the volume crosses those moments that it crosses important levels. You're always going to see an important movement in volume and price, right? Oops. Put my volume back up at the top there. Move to pane above. Yeah, there we go. So I'm going to send you all these files and these charts. Okay. So is anybody still there? Does anybody have any questions for me? I know this was sort of maybe more intense, more information, a little more technical. The volume reading is so important. It's so important. Okay. It's going to tell you so much. I mean, really, you could just look at when volume and time interact, and it should show you when big movements occur. And if you know that, next week I have a course called Volume versus Time Fans. And realistically, every trend has amount of time that it's sitting within, and the trend will, with volume fluctuate to different levels, and we should know where in the trend, what price the price should be at within a trend based on the volume level. Okay. And next week, I'm also going to talk about the square of 9. The square of 9 helps us see this planetary information that I'm laying out in a very linear form at a set ratio. we'll get to see how over time, that ratio, well, there's actually a point in time when it should jump. Even if we are here at this ratio and consistently working for a long period of time at, say, $1 per degree or 50 cents per degree, well, there is going to be a point in time when, yes, these cycles can help us, but also planetary positions within the square of 9 will help us decide, should the market now move at a faster rate just by the amount of time that's passed? And what will that rate be? It'll be relatable to the amount of, increase that the spiraling of the square of 9 has in it. So it's going to be really interesting. Essentially, what you get from the square of 9 is a planetary geometry which spirals outwards rather than staying linear, where every level of 360 degrees is exactly the same. You get a spiraling effect where every level of 360 degrees increases by a set amount. And we'll go through that. So next week is even more advanced. If you found this very difficult, I would say that it's another branching of this same idea, ratios being broken down, ratios being built up, volume being a direct representation of that. And then how could we see the planets affect the price even more? How could they affect it differently? We're seeing the direct connection of the actual price being moved by the actual converted degree here. This is the moon, and it's pushing the price up the circle. Well, what happens when this relationship in the square of 9 actually fluctuates over time and becomes steeper and steeper and steeper? So the square of 9 is great for showing growth beyond just what the linear planetary lines can show you with their linear circle. Okay. So, is anybody there? Anybody still awake? If there's anything else, I'm just gonna end it off soon, pretty much. I know this one went pretty far, a little longer than usual. We went over 3 hours this time. Yeah, this one needs practice for sure, Nick. Definitely. I mean, we're building this structure manually is a skill in its own right? And then building structures on volume is also a separate skill. Then building these kinds of structures in Optima is a separate skill on its own with these, with the ephemeris and things like that. Getting a little glitch in my. Lost my toolbar in Optima here. Oh well, no big deal. We're pretty much done here anyways. So I hope this was informative. Let me know if it didn't make any sense to you at all. Let me know and we can maybe help you out. But I think that basically what it did was it filled the gaps. How do you know when the moon is going to play a role? Well, you need to know when the certain aspect is happening, but also where the volume is at, and therefore what ratio this current market is working at. And when you're working with trading day to day, the ratio fluctuates. Yeah, I know this one is definitely going to take some watching. Hopefully yesterday's was useful, that you can get right into it and start charting those things and seeing the aspects, just like you saw the planetary aspects in the beginner webinars. But this takes it to a whole new level of, referring to the ephemeris on the right, and just in general, having so many more aspects, not even worrying about which aspect is which, just knowing it's going to go to the moon. Okay. And then, yeah, working maybe a little bit of your standard technical analysis in there, using a stop loss indicator, a trailing stop. Okay. So I hope this covered basically everything that I know about the moon. Yeah, basically did, I think. We didn't really talk about the eclipse cycle. You know what? Let me just pull that up. I know that it went long here. If you got to go, don't worry about it. Just go. But my Optima's kind of glitching on me at the moment. Let me just see. Maybe I can glitching. Okay, well, what I'll do is I'll touch upon the eclipse next week. Most of you are taking that. And what I'll do is I'll also touch upon it in a little video and send it to everybody. It's a short little explanation. It's just a timing-based explanation, finding midpoints and breaking up your eclipse cycle into portions, your standard portions, just like you break up standard planetary cycles. You could take your entire eclipse cycle and break it up, find the midpoints of eclipses, and you can do the same with your lunar eclipses in relation to your solar eclipses. It's not very interesting as far as it was supposed to be a sort of a light addition to all of this, zooming back out, okay? But I don't know, it seems a little bit of a waste now that we've gone so far in this direction. But again, I will put out a little video, I guess, and send it all to you guys. All right. So I think this is where we end off. So thank you very much, everybody. We will see you next week. Cheers, Nick. Thank you. Thank you for being there, Amber and Nick. You guys are really amazing for being there. Thanks, Scan, man. Yes, amazing. Thank you. Thank you, guys. Thanks, Amber. Yeah, well, I mean, that's the reaction that we're looking for, right? It's got to be pretty exciting stuff once you see it happening. But yeah, try it out and then ask me, you know, if you find any problems along the way. Let me help you get to the settings right, especially if you use Optima. I can really help you get your workbooks in order, help you build your files, figure out your volume levels, figure out your ratios that you need. Okay. All right, guys. So I'm going to end it off. Thank you guys a lot, and you'll hear from me with the recording and everything in the next within 24 hours for sure. Talk to you soon.